Man, I had no audio. That was honestly like that was a really good intro. Like I felt like high energy. That's such a good intro. That's such a good intro. Well, it's a shame. Every single time, like every time I have that really good intro, that's when the microphone is not working. Do I not just still not have audio? Let me see. Do I still not have audio? It should be working. Testing. Let me know in the comments. All I can see is no audio. Can you confirm that we actually have audio? Hello world. Are you listening? Can you hear me? Let me see. Can I hear myself? All right, good now. Perfect. Okay, so welcome to the 5ers live trading room. It's Tuesday. It's the technical Tuesday. This is the part of the week where we are going to have two different segments. First, we have my segment, which is in the first hour of the Tuesday live stream. We're going to be talking about strictly technicals. This is going to be my hour of the live trading room where I share different technical technical setups, different systems that I'm looking at. Maybe explain different indicators, how they work, and how we can apply it to our trading. And I want this to be a space where first, I go through the markets in the first 20 minutes or so, looking at the market, see what trade setups that we might have, what I'm trading right now, what I'm in, what I'm not in, what I'm looking to enter, and all of that. And also try to, give you guys sort of a framework and tell you, this is how this indicator works, for example, and this is how you can apply it with another indicator or another type of price structure. And the idea here is to help you build sort of a framework, sort of a template that you can use to perhaps build your own system, because that's what it's all about. If we're going to be technical traders, we have two choices. Either we are strictly discretionary, 100% discretionary, is trading based on the knowledge that we have in trading. For example, the specific pattern might have, we know that when it breaks out, this is how I'm going to trade it. And when you see that pattern, you trade it like that. But of course, to be trading from a strictly discretionary perspective, or to be a strictly discretionary trader, you have to have a lot of knowledge. You need to know, you need to know how all of these indicators and how all of these price structures, how it all works, because otherwise you don't really have anything to be discretionary on. You don't have anything to base that on. So for most of you watching, I think it's better to start with trying to build sort of a system, right? And that's what we want to try to do here. The first, what we're going to do is obviously we're going to go through the markets. You can see here that I have a setup right here on the chart. By the way, it's freezing here. My heating system has broken somehow. The pump in my heating system is broken, so the radiators is not getting enough heat, and the warm water is not getting warm. So I'm waiting for someone to come here and help me out with that. In the meantime, it's going to be it's quite cold. Not gonna lie, it's quite cold here. It's if I start shivering, you know why. Probably need to start a fire here in the office. People start jumping around. All right, good question. So, is there any such setup which you can do regularly which can regularly? Okay, so basically what you're asking is, do I have any setup that regularly works in the market? Well, there's many different types of setups out there, but it's also important to understand that for most of you, the real problems in trading, they're going to come along after you have a setup, after you have a technical setup that you're going to be trading. The big issues comes with actually follow along. Like I can give you an idea of a setup, right? We can right now. We can go to all right. Let's go to Euro NCD. You know I love Euro NCD. Okay, so this is the setup, right? Okay, this is the setup right here. So first, what you want to do is you want to look at the higher time frames, right? You want to look at the daily, maybe even the weekly, and you want to try to see what is the overall trend. And maybe you want to add some moving averages to the daily chart to let them decide what the average price is doing. Is the average price falling or increasing? basically, are we in an uptrend or a downtrend? I have a lot of different indicators on here, so let's see if we we can well, we can look at this market right here, and this is the 3-day chart. This is a good good middle ground between the daily and weekly. We can also look at the daily, right? And we try to figure out what's the trend here. Well, I would say that on Euro NCD right now, looking at the daily, we are in a, what's the primary trend? Let's go to the weekly. Let's see what's the primary trend. So you first want to identify what's the what trend are you in currently. And to make it easier for you guys, let us just use the replay function here in TradingView. Beautiful function, by the way, that we have within TradingView. The replay function, very, very good. So I would assume that most of you would look at this and say that we could perhaps categorize this as an uptrend. Now, of course, you could look at this and say, well, at this point, if we were just trading here, that would be a downtrend, right? With a high, lower lows, that's a downtrend. But then you have a higher low here, and then you have a higher high and a higher low again. So you go from a downtrend to an uptrend. And I would say that now, this is a local uptrend on the weekly. Looking at this, I would definitely be bullish short to medium term. Going into the daily, we see that we have also this beautiful trend right here, higher highs, higher lows, and within this, after printing that high time frame higher low, we also have a local bullish structure here as well. So that's the daily, weekly bullish, daily bullish. Now let's go into the 4 hour. Now in the 4 hour, what I want to do is I want to look at the principle of, let's look at the break and retest, right? We can look at two different options here. We can look at a breakout idea, right? A breakout idea and a break and retest. So first, we are going to look at the idea of breakouts. Okay, so here you have a level, right? That's clearly a resistance level. So what you want to do is figure out the high time frame trend, and we know that we are bullishly biased on what we're watching right here, and we have some type of level, horizontal level right here. You can see that price had a big move to the upside, hit resistance, and then continued lower. You also have a wick here hitting that level, and of course, as with any horizontal levels, it's not the exact price that we're looking for, it's the area around that level. So let's just see if we can, you know, put the rectangle. We select the rectangle tool here, and we create a buffer zone around this level. So maybe something like this. It's equal length. And I think that fits quite nicely within the price action, right? So you have minor reaction here, get a reaction here, and then you have that one on that level. So this is a good level. Now, there's two ways to trade this. Well, okay, there's maybe thousands ways to trade this, but there's two fundamental ways of trading horizontal levels like this one. The first one is the breakout, and the second one is the break and retest. Now, for a breakout trader, there's a lot of different ways you can execute this. And the thing is, you're asking me about a specific setup, but it's much better if I give you ideas and then you test those ideas. And then you ask yourself, do I like this idea? Can I trade this idea? And it is something that aligns with my personality. This is something that I like doing. It doesn't make sense to me. For example, I'm a break and retest trader. I don't really like the idea of being a breakout trader. It doesn't really align with the way I want to trade. But there's different ways you can trade the breakout. One way would, of course, be if you know that the overall trend is bullish and you think that, you know, okay, break above this level, most likely the overall trend will continue. So you can put limit, what is it? Stop buy orders, or I think it's stop buy orders, right? When you have a, I very rarely use that, but it's basically an order that once price hits at level, you automatically enters the market at market. Now I'm sure there's buy stop limit, but this would be probably buy stop market order. That's even the right word. And then we could look at, you know, it stop loss. We would want to have the stop loss maybe below these lows, maybe even, you know, higher up. going even lower into the lower time frames, and we would see, okay, so if this level breaks, well, then price should not come below this level. So let's put a stop loss here, right? Stop loss could be, we could view that wick as our invalidation level and put the stop loss down here. And then you see, where's the resistance area? Well, I think it's quite clear that we have a resistance area here. So let's put our TP right below that level to make sure that we're front running that level. Because if, you know, we're not alone in looking at this level as resistance, there's a lot of people going to looking at this level as resistance. We want to make sure that we're front running that level to make sure that our orders are getting filled. That's a great question, Gossip. I will get to that in a moment. By the way, guys, make sure you liked, press that like, make sure you like, make sure you subscribe, all of that fun stuff. So this is a breakout trade, right? Now let's see, price comes up here and it breaks out. Actually went straight to TP there, and you see that stop loss level was actually a really good level without even seeing this type of price action. Rango, we have had some issues with the dashboard, and I want to address this with full transparency. And is, you know, we have a lot of people contacting support. You can understand that it's normal human beings working in support, and we are overwhelmed with a lot of support messages right now because of a small issue that we had with the dashboard that should be fixed at this very moment. So we do appreciate you reaching out to support and you being patiently waiting for the help that to fix this issue. I haven't talked with the team, so I don't know exactly what your specific problem is, but rest assured that we're working on all the tickets and we are going to respond to all the messages, and there's no need to worry about anything. Just stay patient and we'll get back to you as soon as possible. And if you have anything specific you want to ask, then let me know in the comments and I'll see if I can help you out. Yeah, we're live already. We're gonna be live from 10:30. So that is my local time. So 10:30 to 4 every day. Not every day, Monday, Tuesday, Wednesday. Okay, so we have now looked at the breakout ID here with just placing an order to enter the market at market price once we break above that level. Now let's take a look as well on the break and retest idea. The break and retest idea is based on the fact that a lot of times when a level is broken, price tends to move back to that level and retest the level before moving higher. Now in this case right here, the break and retest idea would actually be invalidated because the target was reached before the breakout. So for a break and before the retest, so the target was reached before the retest of the breakout level. So for a break and retest idea to be valid, we want price to break above the level, and then we want to see a retest of the breakout level before hitting that TP. So this level right here would have been that TP. I quite like that level, right? Something like that. That's going to be the TP, right? And this is the retest, and I like this. You can kind of see how price comes up, rejection down, and here there's a rejection, but then the creates range. Bob wants me to turn off the music. Is the music too loud? The idea is to have some background music. We want to have some background music, but I will turn it down a little bit. Just for you, Bob. I will turn it down. Okay. So I like that actually, because it's also very good, you know, changing character of the or changing behavior of price action here, because you see that, you know, price is having a, you know, strong hit of support and then immediately moves away from the level and then back down. And here it like it creates a range on the level. It's consolidating right above that support and then it breaks down. Same thing here, resistance, move down, resistance, move down. And then it comes up and it kind of consolidates around this level right here. And I quite like that. It's a good, this is usually what price action does before that breakout. It's a change of price action, a change of its character when when interacting with that level, and then you get that breakout right there. Give me a second here. So without giving you, any like details of a specific trading setup or a trading system, there's a lot of things you can do with these two concepts, the breakout and the retest. And usually what you see is you see a breakout, and then what you want to see price get rejected at a minor FTA, which would be that level right here. And you can see that on this breakout, price just goes straight through the level like that. But on the break and retest, you want to see price go up to the minor FTA, like the very first trouble area, which is going to be that level. And then price moves back down here. And this is where you enter, expecting this level to break on the second retest and that final TP getting hit. So you get a move like this, a level to level move. But then sometimes the breakouts are just there's a lot of momentum behind the breakout. So the breakout becomes a strong breakout and hits that TP right away. And then that would not work as a break and retest setup. But these two concepts, very powerful, and it's very easy to backtest. All right, and it's a very easy way of trading from a discretionary perspective, and also create a system around it. One way I like to do as well, looking at the retest, I like to find levels that usually we call them clean or naked levels. A clean or a naked level is a price action level that has not been retested after the breakout. So we can look at this level here, for example. So this is on the 4-hour, and we want to add a level right here, and you can see how this is a good horizontal level, right? And we want to go even deeper into the lower time frames right here. Let's go on actually all the way down to the 15-minute. So you said this is when this level broke, you see a strong move to the upside, right? And move like this, and it's not retested. Okay, you have a retest of a level, but not the level. Didn't retest that level. We're going to go back to the 4-hour here. And this is a great example as well, because you have a change of structure here, a change of market structure as well. You have a downtrend, kind of like this. You break above this level, which is a change of structure. The next time this level gets tested, it should be a strong level, because the way horizontal levels work is you have a horizontal level here, and the more a level gets tested, the weaker it becomes as support. But on the contrary, it becomes stronger once flipped and tested from the other side. So the number of touches prior to the break will determine the strength on the retest once tested from the opposite direction. And the first test, you probably hear me say the first test is the best test. And that's why I always say the first the first rounded retest, and I'll explain what that means in just a bit. But what you have here is obviously price giving us a fairly good naked level. Then price is approaching this level here, comes down, it's testing that level, and it's even testing this level as well. The candle closes here, so that's interesting. Now we have a very good looking level here. This is the first retest after a support and resistance flip. And what do you do now? What do you do now? I want you to help me out here in the comment section. At this point, price is retesting the level. Now, what would you do in this situation? Are you going to enter right now? Are you going to market enter as soon as price hits the level? Are you going to look for any type of confirmation? What type of confirmation would that be? Are you adding an indicator to this to confirm that momentum is coming in from, the bulls are coming in and buyers are taking control here? What type of confirmation would you want to see? And if you're entering in market, would you go in with full risk? Please let me know how you would be trading that. Full margin buy. That's exactly what I'm trying to say. All you go all in. Just go all in. No, don't do that. Please don't do not do that. Okay, so we have. I like we get a good mix of risk management here. We have one saying full margin buy, one saying wait. We got one saying plus to the moon full risk. So we got a very diverse community here with risk management. So I like that. Okay, so we get a couple of we get very good comments here. I love it. Okay, bullish candle or pin bar or hammer candle or double bottom. Okay, I like that. So I actually think what you mean with bullish candle. I think maybe bullish engulfing. That would be good. Bullish engulfing, pin bar, or just a bullish candle, honestly. And then 5 minute fair ICT. I don't know. Maybe. I don't know. Wait for buy signal. Yeah. I mean, I guess wait for buy signal is what we're going to do. That's what we're waiting for. But what does that buy signal look like? Pin bar candle or maybe bullish engulfing. Okay, so let's go with that. Let's see if we can get a pin bar candle, a bullish engulfing candle, or yeah, okay, pin bar candle or bullish engulfing candle or some type of hammer. And now, on what time frame do we want to see that? We're gonna try this out. Okay, so we've decided that we're gonna be looking for a specific candle to confirm this setup. On what time frame do we want to see that confirmation? Okay, I'm gonna do a poll on YouTube. You can go to the chat on YouTube, and I'm gonna ask what time frame candle are we going to do? Are we going to do 1 minute? Okay, I'm not going to do 1 minute. I have to do 1 minute though, because now everyone's saying 1 minute. Okay, so we're going to do 1 minute, 15 minute, 1 hour, or 4 hour. Okay, so get good mix here. You can go in, you can vote right now on the chat in TradingView. Let me see what time frame are we going for. 1 minute, 50 minutes, 1 hour, or 4 hour. Right now we got 50. We got 15 minute has 40%, 43% on the 1 hour. It looks like the 15 minute are leading right now with 45%. All right, let's see. Can we get any more votes? Come on, guys. Come on. 50 minutes. Looks like 50 minutes. Maybe press the 4 hour. Seems like you're definitely more interested in the lower time frames here, which is probably why the failure rate is so high in this industry. If I'm going to be honest, I think the lower time frames are way more complicated to trade than the higher time frames. And seeing as everyone's kind of like very interested in learning to trade on the lower time frames before they go into the higher time frames, maybe that has something to do with the failure rate in this industry being so very, very high, if I'm going to be honest, because I do feel like most people are slow thinkers, and slow thinkers should be swing traders. If you're I believe it's a system one thinking, it's a fast thinker. But anyway, if you're a fast thinker, then definitely lower time frames. But I think, looking at the statistics of us as humans, I think you want to start with swing trading, and then you want to move down to the lower time frames once you understand the primary, the secondary, and the the intermediate trends and how they work with each other. Okay, the 15 minutes. So we're going to end the poll, and it seems that everyone is in agreement with the 15 minute. We're going to be trading. We're going to be looking for confirmation on the 15 minutes. So we'll go down to the 15 minute, and okay, so now the level. Okay, I'm just going to make it easy here. The level actually was tested here, and I would say that is a bullish engulfing candle. So I guess what we have to do here is we have to enter on this one, right? Because is this not a bullish engulfing candle? It's an outside bar as well. Victor is probably watching now and being like, hallelujah, it's an outside bar. He loves his outside bars. And it's probably somewhere you will probably find an order block as well. Looking at this and he's just drooling and crazy. Okay, Victor, if you're watching this, I love you. Maybe you're not watching. If you are, is this a bullish engulfing candle? Is this where we enter? Is it? Is this where we enter? Come on, people, answer me. Are we gonna enter here? Is this a market buy? This is the confirmation we're looking for on the 15-minute, right? This is where we enter. Okay. Well, no. Harris says no. Okay, I'm gonna enter anyway because that's what we decided. Now we have the entry right here. Where do we? Oh. Come on, guys. We decided that we were gonna enter on a bullish engulfing candle. Like, we gotta stick with the plan. Oh, wait for the close of the candle. This is the close of the candle. I mean, I'm trading replay. This is not live trading. I'm just showing some. I'm just, you know. Okay. No, we don't see any. Cook. What is that? Change of character? Okay, enter. We have, yes. Philosophy of winners. There we have it. Obviously a winner. Yes, sir. Okay, so we go back. We'll look at the 1 hour. Where are we? Yeah, but this is the close. The close has it closed here. This is the replay. So next candle. This is the close of the candle. Okay, where did we place our stop loss? Yep. What's up, Yassine? Welcome, dear moderator. Moderator has entered the chat. Time to stay calm, collected. Okay, so where is stop loss? Where are we going to place stop loss? So now remember, this level is based on higher time frames. And this, guys, I think this is the problem. I think this is the problem that I think most are why you find trading so difficult. Okay, because so when I started this, I talked about, okay, we got to look at the higher time frames. All right, we got to look at the higher time frames. Where are the high time frame levels? We're looking at a level that we find the breakout on the 4 hour. It's clear on the 1 hour, and like what I'm trying to get you to understand here is we cannot just go into the lower time frames and just enter on the first initial confirmation and then put stop loss right below that candle. Because guess what's going to happen here? Guess what's going to happen? If we place stop loss here, well, then this is going to happen, right? But what if we zoom out? Okay, what if we zoom out and we look at at least the daily or the 1 hour? Now we have to determine. Yeah, we don't start with London Open. The plan is to start with London Open. In the future, we want to start with London Open, but at least we're starting during the London session. Okay, so with this breakout, now we need to determine the stop loss based on where is our ID invalidated. Now, listen, guys, pay attention here because this is very, very important. If you are going to use this type of price structure right here as your area of invalidation, then you need to make sure that you have price action that first confirms a reaction to this level so that you have a level of invalidation. And what this means is on the lower time frames, you want to see a reaction in this level and probably a low time frame breakup structure. And that is the structure that you're going to be basing your stop loss on based on invalidation. If you're going to be entering on the very first confirmation on the lower time frames, when you're hitting that setup, you don't have any invalidation levels. Okay, then what you have to do is you have to go back in time. You have to look at the left side of the chart. You want to look at what happened when the level broke, what happened last time this level was tested, okay? And you want to look at the last low pre-break. Where is the last swing point prior to the breakout. Well, on the 1 minute, 1 hour, this is the last swing point prior to the breakout. How do we determine a swing point? Well, one way of determining the swing point, now I can't remember if this, who came up with this idea, if it was maybe Gann or some other dude back in the day with way too much time. You have one candle here, and then so it's going to be a one. You know what? Forget it. This is a swing point right here, and we all know why that's a swing point. Usually in a downtrend, you have two bearish candles, and then two bearish candle on the left side, and then two bullish candles on the right side, and then that candle in the middle is the low, and that's the swing point. So on the 1 hour, like, this is my invalidation level. We can go even lower than the 15 minute. And we'll look at the last swing point prior to the break. Well, that's going to be that one. So when testing the system, you have to be very sure. You have to be very systematic here. Are you going to be basing stop loss? Are you going to be entering on first confirmation when it hits the level? Well, then you have to zoom out and look to the left of the chart and look for your stop loss levels. And then you have to say, what swing point am I going to be focusing on? The 15 minute, the 1 hour, maybe the 4 hour. Okay. So here, I'm going to go with the 1 hour swing point, which is going to be that one right there. Actually, can we add an indicator, a pivot point? It's a pivot point, right? Pivot point standard. We can look at the Gann pivot. Or is it the mark? Yes, let's look at the normal pivot point. That one? What is this? Yeah, okay. That's not the one I'm looking for at all. So we have a setup right here. Now I want my stop loss to be all the way down here. Okay. Now we're talking about a 23 pip stop loss, and for those 1 minute warriors out there, you're gonna be like, oh my god, that's a wide stop loss. Well, it's based on price action, right? So if I'm gonna be entering based on just the first confirmation, the first reaction to the level, then obviously we need to have a wide stop loss, because we don't know how far down the move is going to go. You can also add the fib from, again, the swing point prior to the break, from the low to the high. Well, that is just beautiful, isn't it? There we have it. That's the fib. Now you can, based on your testing and your back testing, put your stop loss below the fib levels. If you see that the reaction to this level, what I call the reload zone, within this reload zone, that's usually where price reverses, and price usually do not go below the reload zone. And if it does go below the reload zone, then the idea is invalidated. Well, then you can place your stop loss down here. Well, let's just see how this goes, right? And then kind of play this forward to see if we also get a confirmation here on the lower time frames. Let me show you what I mean by that confirmation as well. So this is good, right? Now we start seeing, let's go back once. Like this is good, right? We have a good reaction to this level. 3 bullish candles, right? Let's go into the 15 minute now. Now this is what I like, because now on the 15 minute, we have a complete change in behavior of this downtrend. You have a high, low area, high, low. It's a very clear downtrend, right? Where does this downtrend shift? Well, right here on that breakout. Now, this to me looks like confirmation. So what we can do in this case is we can enter here, and now we can limit that stop loss. Now, this is what I mean by only really being able to have a tight stop loss after you have good price action confirmation and good break of structure. Now, I really hope that this works out. Otherwise, I'm going to look quite stupid. But let's see how this moves. Oh, well, look at that. That is, well, we got lucky. Definitely got lucky on that one. But you can see also, pretty nice, right? Hit the 0.618 right here beautifully. And then it starts moving higher. But this is the idea, right? This is the idea of first waiting for very clear break of structure on the lower time frames if you're going to have a tight stop loss. Otherwise, if you're going to be entering as soon as the level hits, then you want to have a wide stop loss, because you don't know where that volatility and that momentum is going to take you. All you know is that this is the general area where we think we're going to get a reaction from price. We don't know when it's going to reverse. We don't know, when it's going to happen. We just know that this is a general area. What I've just showed you now is at the very, very core of technical analysis. Make no mistakes about it. Every system out there, you can go buy a course for $100, you can buy a course for $1,000 or even $10,000. You're gonna see the same stuff. You're gonna see the same stuff because guess what? Technical analysis is limited to what technical analysis can do, and there's only certain things that you can do with technical analysis. You cannot reinvent technical analysis. A breakout is a breakout. It's still going to be a breakout, and a break and retest is still going to be a break and retest no matter what you call the candles. The principles are the same. The primary trend in any markets are still the primary trend. You can rename it to whatever you want, but the market structure and the principle and the underlying foundation for how the markets move is still the same now as 100 years ago, okay? This is very important to remember. Stick with the basics and only add new things and try to improve the basics if you really have the statistics to back up that's working. Because guess what? There's a lot of setups out there. There's a lot of systems out there based on this that works. We don't have to reinvent the wheel. The wheel, aka technical analysis, has already been invented. We don't have to reinvent anything, okay? All these fancy courses and all of that is just a way of renaming and repackaging what people like Charles Dow already did. He already did it. Okay, we already know how the markets work and how the markets move. They move in cycles, they move in trends. We as technical analysts and traders, we're going to be following the trend. That's our job. Okay. Now, with that said, let's let me see what do we have in the schedule today. Let's keep on talking. I'll forget about everything else. That's right. We have Pedro is going to be joining us in about 15 minutes, and then I'm supposed to not be live at 12. Wow, time flies. Crazy. Let me just share the invite link with Pedro, see if he if he's able to join. All right, so now that we have a quick crash course on the break and retest and the breakout, and this is the things that I'm going to be showing, and I'm going to be showing you this every Tuesday. This time, every Tuesday, I'm going to be going through these quick mini lessons on technical analysis, and really help you and make you understand that you do not need to have a super advanced system to be profitable in the markets, and it's much better to start with the basics and then make it more advanced only if you need. Because and also please understand that I truly believe that there's more profitable swing traders than there are day traders. Something happens when you go lower than a 4 hour. Okay, something happens, and what happens is you have the primary trend, which is the trend that's visible on a monthly or maybe even yearly time frame. When you look at the stock market, I would definitely say that is a yearly perspective. Looking at the Forex market, though, I do feel that the cycles and the difference between the primary markets and these two asset classes, they are shorter. The cycles and the primary trends that are somewhat shorter in the in the Forex market. Now I forgot what I was saying. Oh, that's embarrassing. Let's just continue with whatever I was going to do before I'm going to break that down. I'm sure it was a very, very interesting conversation to have with myself. Okay. Yesterday, what happened yesterday? Okay, so do we have a trade war or do we not have a trade war? I don't know. Apparently, Trump is, it seems like Trump is using tariffs as a negotiation tool, which is just, I really did think that he was going to impose the tariffs, but apparently, art of the deal, he's making using tariffs as leverage. Looking at a short position, I was in USD CHF, got stopped out on this one. Very unfortunate, but we can look at the daily. We now have a double top right here. I will wait until tomorrow to make a decision. I will most likely re-enter this again. I really do like the double top that we're putting in here on USD CHF. We obviously, of course, we want to look at the dollar currency index right here. We go to the, where's the dollar currency index? Wow, we got a lot of viewers, by the way. Hit the like. Hit the like. Share with everyone you know. Call your mom. Let her, you know, see this as well. Gotta spread the knowledge of, you know, trading. Gotta have everyone get in here. This is a big wick on dollar currency index, right? This is insane. This is, you know, you have a massive wick here on the daily time frame on the dollar currency index, and right into high time resistance, possible double top here. I really like this. It does seem like the strength of the dollar is pulling back because of the Trump kind of backtracking on the threat of putting tariffs on everyone and everything. It's just absolutely insane, but it is what it is. That's the world we live in. And the gap of Nasdaq app used filled same day yesterday. Crazy. The gap on S&P 500 seems to have been filled yesterday as well. Absolutely insane. So definitely, yes, I was. Oh yeah, that's right. I was talking about Forex. Thank you. I was reading the comments like, what are you talking about? But now I understand. You're talking about the things that I was talking about. Yeah, I do think that Forex traders on general are swing traders in general are more. If you take all the swing traders and put them here, and then you take all the day traders and you put them here, you can't see my hands, but my hands are here, and then on the other side, so swing traders here, and then you have the day traders on the other side, and they're looking at each other and they're like, you're not profitable, and then you're like, you're not profitable either, and then like, we'll show the proof. And I would say that swing traders, in general, there's more. Looking at the swing traders, we put the swing traders in a big basket, and then we look at the percentage of profitable traders in that basket. I think the percentage of profitable traders are higher in the swing trading basket than it is in the day trading basket. Now, remember, I do have some insights into this, and I do really think that that is the case, especially long term, for many different reasons. Mainly, I would say psychological, but also you look at the human population as a whole. I think that there's a higher percentage of people that are. I'm not saying they're stupid. I'm just saying they're thinking more slowly, which is just they're thinking more long term, which is absolutely not a bad thing. I'm definitely a slow thinker. I look at something and I like to analyze this situation. I like to research and I like to think a bit more deeper and longer. And I think that's easier for most people to make good decisions under very stressful circumstances, and to make decision based on intuition impulses. I think that's much more difficult. And that's what you need to be good at with day trading. And with swing trading, you need to be able to think long term. Yeah. Okay, we got a lot of comments already. A lot of comments. Let's go through the comments. Okay, from my point of view, a mix of these two, day trading, swing trading, would be using the 20 to 30 minute chart. That way we can catch the movement. Well, actually, you know what? A good mix of swing trading and day trading is I think Victor has a very good approach to this, where he looks at high time frame levels and then he enters around those levels based on low time frames. And I think a good example of a mix of this could be, let's say you're looking at the daily and you're marking out daily levels. So here we have one. You're going to be marking out daily levels. Then you're not going to be interested in this chart until the daily level gets hit. So you're looking at the daily level, you're doing your high time frame long-term planning and your analysis, and you have an alert right here. Okay, so that's going to be your alert, and then price moves down, boom. Oh wow, that's quick. So alert goes off right there, and now price is within this level. Okay. Price is within this level, and now you can go down to the 1 hour. Okay, you look at, this is the invalidation. Where is my TP? My TP is going to be up here. We have TP up here, and then we have perhaps stop loss to begin with down here. And the idea would be something like this. This is a decent trade, definitely. As a swing trader, probably have it lower. But you want to, like, this is your general idea. You go down to the 1 hour, and now you look for a breakup structure, or just a bullish, maybe a break of this trend line. You know, something like that. That's a decent trend line right there. Maybe you break up that trend line, which you have right here. So you break that trend line, and then maybe a break and retest of this level, something like that. And then, of course, if you get that, you can have your stop loss, you know, down here. So you get a breakout, and let's say you put your you wait till you get that retest. That's a retest of the level. We go down even to the 15-minute. So we know that, as you know, we're inside the area that I would want to enter a swing trade. We look for the 15-minute. We see still somewhat of a downtrend. We can add the reload zone here. If you have a reaction down inside the reload zone, we do 0.618 right here, and there you break out. Is it good? Because now you have, you know, that downtrend, and then you break a structure. We have a hit of the 0.618. Now we put our stop loss below the reload zone, and our TP is going to be the same as what we would have for a swing trade. So this is now a 4-hour trade, and then you just hold it and you wait. Boom, right there. That's that TP. Now this is also tradable on just a 4-hour, but what you can do is you can get very tight entries when you go into the lower time frames. Like here, for example, you have a hit of the 0.618 right here. So that's the hit of the 0.618. But if we go even lower into the 1 minute, and then you say, okay, this is the level of interest, and you have price breaking above that level. What if you just enter on this level, like that breakout? Then you're gonna put your stops here, you zoom out, and your TP is still going to be, up here where you had that previous TP. Now, I mean, this is a 30-hour trade, which is just insane. You might as well just put that stop loss down here, and you have a more of a maybe realistic of 10-hour. But I think this is one way of combining all the time frames, and you're combining the swing trading approach with the day trading approach, but you're keeping the TP levels as a swing trade, but you're optimizing the entry area. And I believe that is the best combination of swing trading and day trading. The problem is, though, that the win rate obviously will be much lower because you're going to get stopped out quite a lot, and that's going to affect your psychology. And because that affects your psychology in probably a more negative way, you're going to be making more impulsive decisions. You're going to be making more trades and maybe taking on a little bit more risk than you want, and maybe take a few trades that you normally would not take. And that's where the issues of day trading comes in. The problem with day trading and scalping is not that it doesn't work technically. It's just that it affects you from a psychological point of view much greater than what swing trading does. And that's the problem. Not that there's no profitable swing trading systems. I mean, the scalping systems. It's just that it's difficult to handle if you don't have the mental capacity to do so. Day trading plus swing trading only good for full-time traders. If you're still working, then focus on swing trading daily. And yeah, this is also one of the reasons why I say that most people are probably better off focusing on swing trading, because if you're working a full-time job, let's say you leave home before 8 in the morning, you get home at, I don't know, 5. And if you have kids, you get home at 5, there's a lot of things that needs to get done. And you're probably not able to, get to the chart maybe after the kids go to bed. So you'll have maybe 1 hour on the evenings to actually trade and do all your trading. And so you have to decide, like, on that 1 hour that you might have a day, or maybe, you know, max 2 hours, are you going to be super focused on your scalp, or are you going to look at high time frame levels and put in orders and have more of a slower long-term approach? And for most people, I think if you already have a busy life, it's very difficult to integrate scalping and day trading into that already busy life. And there's no point even starting thinking about full-time trading unless you actually, you know, are able to do it. You need to really, you know, to be able to go full-time, you need to have a lot of savings. You need to be able to survive many months of not making any money. Can you do that? Can you realistically survive when you're not making any money from trading? But get that's the reality of trading. You're not going to be profitable all the time, and then at some point, maybe your system is just not going to, it's just going to lose its edge. So trading part-time is as a swing trader, I think, is where we want to start. That should be your realistic expectations, and we should not be moving into the next realm of, you know, full-time trading. And for most of you, full-time trading might not even be the realistic end goal. Okay, I mean, people like to say that everyone can become a trader. Do we really think that? Think about it. Do we really think that everyone can become a trader? Let me know in the comments. Let me know in the comments. Do you think that everyone can become a trader? Do I think that? Well, I will let you know in just a bit. Can you hear that? This is a quietness. TNT comes in with an explosive no. Yes, but it takes time. And are you willing to give time? I mean, time is everything, right? You know, the older I get, the more I start thinking about time. It's both depressing and liberating at the same time. Time is everything we have. We don't have anything else in time. Time is the only thing that, you know. Yes, with good psychological support. Jimmy says, what's up, Jimmy? How's it going? So Jimmy says, no chance, bro. Okay, so do I think that everyone can become a trader? Well, first, let's define trading. So when we talk about trading from a, you know, wanting to be trading full time, we're basically talking about someone that has mastered one profession that is one of the most difficult things in the world to master, and that's day trading full time and making money doing so to be able to afford a decent lifestyle. That to me is what I think most people are thinking about when they say full-time trading. Okay, so if that is what day trading is, or what full-time trading looks like, then we have to think about the fact that a lot of people are comparing this type of trading to high performance sport. So let me ask you this. Do you believe that you have what it takes to be a NFL quarterback or a, you know, world star football, soccer player? Do you think you have what it takes to be that type of person? And I think most of you would say, there's a very slim chance of becoming the next Ronaldo or the next Messi. But that's kind of what we're looking at, okay? So it's really important to have realistic expectations of how difficult this is. And if you don't think you can become the next Messi, then maybe you can become the next, I don't know, whatever, you know what I mean? Like, maybe then shifting your focus just slightly to something where I believe you have a higher sense of success, which is zooming out. Do not live on the 1 minute. You're not Messi. Do not live in the 1 minute. Okay. I mean, I'm not trying to discourage you. I'm just trying to help you find your way in trading. Yeah, I'm just on it. Pedro, how's it going? Let me add you. Can I add you? Are you ready? Give me thumbs up. Okay. All right, Pedro.
Morning, everyone. What's up?
How's it going, Pedro? Welcome to the show. How are you?
Yeah, I'm good, man.
You're looking a bit blurry this morning. Are you feeling okay?
Yeah, I'm good. Maybe my camera, let's just see. It's 170.
Yeah, it looks awful. Ah, look at that. It's better. I think it's better. Nope. Whatever.
Better?
We can all see you. At least we know it's you.
Yeah, it should be okay though. Yeah, just give me a second.
Have you okay, there we go. There, it's back. It doesn't matter.
Yeah, it was not like this before.
Yeah, there's just some
with
focus happens to me all the time. Okay, how are we? We have okay. I'm gonna take a look at the DAX. So let's take a look at DAX because this guy has been asking quite a lot about DAX. So let's take a look at what we have right here. Yeah, this is so incredibly bullish. I'm so disappointed in myself that I was not able to. I remember I went long here. And I got stopped out here. And then I, for some reason, did not enter on that one, which is obviously bad call. But okay, so the DAX, it's a bit of a difficult one because I feel like, I mean, this is a stock index, so there is of course the that up only potential or the bullish bias that these indices has. I had a really good test of this level on the move lower. It does look like, yeah, I don't really have any good read on DAX. I don't know. I honestly don't know. Can't really give a good answer to that.
Yeah, I can take a look at DAX in a bit. Just give me a second. Still trying to figure it out the camera.
Are you trading anything today? Oh, he's gone.
No, one second.
Yeah.
Pretty sure. Yeah.
Take a look. Do you have any news today? Let's see what we have.
We have the job openings at 3 p.m.
Right. And we also do we have NFP this yeah, on Friday we have NFP.
Yeah, on Friday.
Yeah. All right. Have you
Hey everyone. Yeah, I can take a look at the DAX. I can share my monitor if you want.
Yeah.
What is DAX? Because DAX was an interesting one. I was actually looking for shorts last week, but yeah, the thing with Trump, something that at least myself I need to adapt, is the timing of the moves. Like it's no longer normal hours or when we are expecting or just when we have news scheduled in the calendar. Like it's going to be random. And for example, for 2 weeks in a row, we had big moves on Friday evening. Basically, last week it was when Trump announced the tariffs on Canada and Mexico and so on. And 2 weeks before, and the week before that, there was also something going on. And then with the DeepSeek, we had a big gap as well in the indices on Monday morning, which usually Friday afternoon is not really a time when people are trading. But apparently, two great opportunities happen Friday afternoon, which is basically this retesting here when you had these highs in here on the DAX. I've been tracking that one last week to try to short it, but yeah, I didn't really trade it in the evening on a Friday. And then price, in my opinion, price just filled out the space. Like basically the way I'm looking at the market, I'm trying to find space in the market. Basically, where do I think that price wants to go next? And that was basically done. Like most of the indices, with the gaps that we had over the weekend, it was just price completely filling out the space out the way to the lows in this case, where basically price was coming from, like basically the last important low before we had the last high. That's basically where price came all the way down in here. So now we are within this range on the DAX, and we'll see. Like it's one of the indices that hasn't really closed the gap yet. So that's something that is going to be in our minds. We should be eventually expecting the gap to be closed. Question mark is, are we going to then just try to sell as soon as price closes the gap, or should we be expecting eventually price to go even higher and potentially retest again these signs? And again, another question, it will be then, should we even looking for to try to sell again somewhere around this level, or should be looking for price maybe to create new all-time highs before looking for another move to the downside? Like, one of the ways to try to find out that is try to see if there's any good level around this level in here at the highs that maybe can steer it into short. But if you try to find any level of supply or order block or whatever it may be that is still fresh, that maybe we can read into potential short. And maybe there still is, even though this retest already, or this high already retested that level. It may have taken a little bit the orders from this level. Maybe you have another supply somewhere in here that maybe price can look for somewhere around this level in here. Something that I'm not the biggest fan at this point on the DAX is that we already have way too many highs in alignment, which starts to create a little bit of liquidity to eventually price fake out the highs before actually moving to downside again. But this is if price actually goes all the way back into here. Recently, of what we have from yesterday and today is that price actually is already creating a little bit of structure in here. So that actually can be interesting, because if we start creating some highs around this level, it's going to attract people to sell at around these levels, which means that eventually when they see this level being broken, they're going to turn bullish, and that actually can be potentially a zone in here to go into short. But yeah, we'll see. Or can be just a retest. Or one of the opportunities in here can be just to trade from here to here, and then that's it. And then price may go higher or go lower, then we'll see what's going to happen once price comes back into this level. Yeah, that can be a trading opportunity in there if someone is interested on that.
Yeah, I definitely think that's interesting. I think, looking at what we have for price right now, I think a lot of people are looking for that gap to be filled. I think they're looking at the US indices and thinking that DAX might do something similar, but I'm not sure it's going to be that simple. Looking at price action right now, it's just I think it's quite difficult to get a read. And I like that trend line that you added right there as well. The fact that we broke below that trend line and price action is like kind of like all over the place in that range. It's quite difficult, I would say, to find a good idea of if price is going to fill that range or not. So for me, looking at this, I think, yeah, I wouldn't. I'll probably try to stay out of this market until I have clear direction.
I agree with you. I'm not really being involved. I want price to get closer to the extremes. By extremes, again, it's either the top or kind of the bottom to participate. I'm not going to really be active in here unless something like this happens and then price breaks again this structure, maybe from here that's a potential sell after kind of faking out all these sides and properly closing the gap. Maybe that could be an opportunity, but aside from that, I'm not going to be really involved in here until price either kind of gets closer to that level or starts moving lower, and then we may have new price action. Price gets closer to the lows.
Yeah. That makes sense. I have a question here from Shabby Owl. I think it's as long as you're risking the amount that you want to be risking and that you should be risking based on your risk management, then that's all good. I mean, it's very difficult for me to answer this question because the numbers doesn't really tell me anything. I mean, I don't know how the distance between entry and stop loss. I don't know how many pips your stop loss is. I don't know how much you're risking in dollar terms or percentage on your trades. But I would say that 20 trades in a day, for me, that would be, I don't even take 20 trades in a month. So that's to me that's way much. But then if you're a scalper, then that's a good number. And then for the lot size, what you have to do is I would recommend that you try to find a position size calculator and make sure that you're only risking a very small percentage of your account on any trade. And if you're day trading and you're taking 20 trades in a day, maybe look at what's your daily risk limit, because we do have daily stop outs as well.
Yeah, that's again, when he's asking if that's too much, we don't even know if that's too many trades or too much risk that he's asking in reality. And you were talking before in terms of what usually or how traders could actually become more profitable, more of a swing trading approach or more of a day trader. I think one of the ways is also in terms of how many trades actually you are taking. Because when you mentioned that maybe more people maybe in general more slow thinkers, I think one thing is almost for sure is that not many people is comfortable being at kind of being exposed at risk so often, which means that the amount of trades or the more trades you take, that's going to affect your decision making into the next one, regardless if it is a winning trade or a losing trade. Like there's going to be we're going to react differently to each one, but not just don't think that just because you are winning trades that everything's going to go to plan, because you may start getting greedy. You may want to actually then start increasing your position size. All of a sudden you have maybe a big loss, or if you start losing, now you want to recover the money, and that can go into the spiral of losing even more. Like I think we have, again, everyone's going to be different. If you are a scalper, perfect. I don't think many people are born to be scalpers. I think maybe in a range of maybe 3 to 5 trades a day, I think that would be already a good range of trades, maybe even too much. Some people may just take one or two, and they know that they only have that exposure to risk in that situation. I think it's an easier way to deal with the uncertainty of the market.
We have another question here as well. I think this is the what we're talking about here is so the thing with the Forex market is it's decentralized. So you have, for example, what I trade on Oanda, and I'm able to look at the data that comes from Oanda. But if you want to look at a more better representation of orders in the market and get level 2 data, you want to look at the futures market. So for example, look at the CME futures of EURUSD, for example, because that is centralized. That's every order is being routed through a centralized exchange, and then you have volume as well, how volume indicators work if this is a decentralized market. So if, for example, if I put on the volume indicator on Oanda, I'm going to see the volume on only Oanda, but it's not actually the real volume of orders coming in. It's actually tick volume, which I don't know exactly the details of how it's calculated, but tick volume, I believe, is every tick on price is every time the price changes, that is being registered as a move in volume. Every time the price changes, that would be a tick volume every time that that tick changes. So it's not really volume coming into the market. It's not the volume of the orders, but that would be viewed in the futures markets. If you add volume on the CME futures market, then you would see the actual real volume coming into the markets. So I would say volume indicators do not work very well in the Forex market if you're not using them in the futures market. We're gonna have Anastasia on tomorrow. Anastasia is having her session tomorrow, same time as mine today. So I'm gonna be live with her, and we can talk about that tomorrow, because she is trading she's actually charting the futures market, and she's trading the futures market, but she's taking orders on like the 5ers, for example, but she comes up with the ideas on the actual futures markets.
Mm-hmm.
Okay, so how I clear the market or liquidity swept? I don't understand the question. I think you had to rephrase that question. I do not understand what you mean. How I clear the market?
It's the same thing.
Yeah, should probably had to reframe that question, man. Yep. But if I had to guess, maybe he's asking, you know, how can we like wait till that liquidity sweep has happened, something like that, and there's only just one way to do it, is just wait for that to happen, you know. I want to
understanding it, just to finish and start understanding where does it usually happen as well, right?
Yeah,
you need to be patient for it.
do we think that the dollar weakness is coming in here? Do we think that dollar weakness is coming back here, or what are we thinking? So for example, I betted on USD weakness last week. I went long Euro USD, for example. I thought that we had a good breakup structure. Do we think that that is going to continue, or are we going lower?
On the dollar, you mean, or the euro?
Well,
dollar
I guess
weakness,
it's yeah, dollar weakness. Or do we think that that is going to be playing out? Because if I look at the dollar currency index, I quite like on Euro USD, for example, we have a daily double bottom. If we continue higher, we have a very good double bottom on Euro USD. On the dollar currency index, we have a double top with a big wick on a daily. So I'm thinking that we'll have to see this develop, but maybe we have that double top in the dollar.
Yeah, in reality, the way I was looking at these moves, both the dollar, in my opinion, both the dollar and the euro, the dollar at the highs, the euro at the lows, I think there were still orders there to be collected, and basically where price actually reacted. Like we left this demand zone fresh behind. We have some left shoulders as well. Basically, this could be seen as, again, as a quasi model in here, because what I was looking for in this particular case is that these lows, they never really collected this demand zone in here, or those orders, which means that eventually price could come back into this level. Now, the way to come back, of course, it was with the opening yesterday. It was so aggressive that eventually yesterday morning then started to react to the upside. The dollar had a similar situation, right? The dollar, it was exactly the same thing. We had exactly the same structure, but at the highs, where we had a supply level in there. Again, these highs in here never really reacted from the zone, and now we had that reaction. So in my opinion, then you start to looking is where is actually this low reacting from, and you can even ask ourselves where is this high reacting from as well. Like when you're looking left, does it make sense for us that this is the top? Like if you are looking at potentially the moving here on the dollar index and maybe consider all this range in here, does it make sense that the dollar index will just stop from this level? Like, or eventually you are going to be looking for the dollar index potentially to get closer more into these highs. I think that would be more of my answer. It will be eventually, I would like to see dollar index continue to move higher. But for now, price is actually reacting from a good level. Like it's basically this initial structure that we had in here. Right, basically price is creating a little bit of structure in here, and we had this big push to downside, and basically creates a separation in here, and now price is finally retesting this structure. So it's a good level where you can see some reaction, and price has been reacting from it, at least for the last couple of weeks. Price had already reacted from it, and price actually reached a good target, in my opinion, last week during the, I think it was a Fed meeting or something like that, that we reached this level in here, right? Basically, this is a structure where we managed to break this important level of resistance that we had on the left side. It was a demand zone that price never really come back to collect the orders. Basically, price broke up, pause in here and start to move to the upside, leaving this level behind. And that's basically where price end up reacting from. But this now opens the door again, because many people are going to be looking at this structure, and you will see that we did manage to break structure, right? We did manage to break these lows in here, which may start positioning many people looking at the turn bearish in this kind of situation. Maybe looking at this above top, thinking that price now is ready to resume. Especially, yes, if you do break below this level, I think then price can go further down. But this is one of those tricky situations where, again, if I'm looking at monthly time frame, maybe I still think that dollar index may want to go higher. If I'm looking more into this time frame in here, I can see that we did manage to break that level, but we did react it straight away from a level that makes sense. I don't really see a break of structure in here. We broke lows, but we didn't really broke structure. But as I was saying as well, this level in here was still fresh, and it would make sense for price to at least have some kind of reaction. So I would say once again, we are basically within the two structures, and price is in the middle at this point. Like, do you want to go long or short from here? I have no clue what to expect. If price comes back somewhere into this level, potentially I can look for another short if there are orders in there, and if price starts moving to downside. Personally, I'm not really interested in looking for longs in here, so I would just prefer to see price breaking and start moving to downside. I could look for shorts at the highs. I'm not really interested to look for longs at these lows at this point on the dollar index. And we can do basically, it's almost the same analysis on euro dollar when you're looking in here. The reaction is good. Looking at the bigger picture, I do think that euro dollar still wants to go a little bit more to the downside eventually, but for now, it can be a good level as well to have some kind of reaction. Now, is this high in here on euro dollar? Did it manage to break anything relevant to the upside? We did manage to break a little bit of this structure, but we are still kind of within this range. Basically, after we did manage to break this structure, we created this range in here. This can be seen a little bit as a move to the upside potentially. If I compare this high with the low on the dollar index, I'm okay with the low on the dollar index. I could see this one as a break to the upside a little bit until price potentially get into that level. And you can add another correlation, which is the euro index. The euro index for me, it actually reacted nicely from a good level. So we also managed to break off the structure in here on the euro index. Can ask questions in a bit, 1 second. But price just retested this level and potentially can continue to move to downside. And on the euro index, I could still see more downside in here after price basically reacted off from those highs, start breaking these lows in here. I think this could be just a retest into the structure and potentially resume the move to downside. If that happens, maybe we can have more downside on the euro dollar as well. But yeah, that's a little bit more on in the bigger picture that I'm looking for in here.
Yeah, that makes sense. No, I think for me, what I would want to be looking at is I probably want to wait and see what happens after NFP. I think it's we have there's a lot of development. So, you know, as a swing trader here, that I'm trying to basically, I saw clear signs, you know, before this happened that Euro USD was showing signs of a break of structure, technically, and also other pairs against USD. But I think it will be more clear after NFP and maybe next week if we get that reversal. So I think for me, at least, I need to. There's probably not going to be a lot of trading for me this week. And I need to wait to see what NFP has in store, basically.
Yeah, and then of course all these negotiations that Trump is implementing with the tariffs, right? Because I think, as you mentioned, like this looks like more of a tool of negotiation than anything else that he's using. Now apparently delayed for 30 days in Mexico and Canada. The reality is that he's being a bully, right? He knows that he's the strongest country in the world, and he's being a bully in the way that he's doing everything. And then he knows also how dependable those countries are from the exportation into the US. So that's what we have at this point. We have what you can conclude at this point is anytime it threatens with tariffs, dollar goes up, everything else goes down, basically, right? And as soon as kind of that the situation goes back to normal, we have the opposite reaction, and kind of dollar goes down and the others go slightly up. So this is something that we can start to understand. Eventually the market, it's either going to start calling bluff to what Trump is saying or doing, and you may start noticing that the reactions are going to be smaller. I think that's eventually what happens. That tends to be usually how the market actually reacts. First time that something is new, there's a big reaction, and then the market tends to start adjusting, even if those news continue to be released. So yeah, that's basically a little bit of what you need to be aware of in this particular case. Are you still going, even like, because the way price has been gapping and reacting to the tariffs, eventually when you get to the NFP, maybe the movement is going to be even, I don't know, 20% of the volatility that we had just over the weekend. All right, so that's going to be something. Yeah.
Well, I know that I'm not gonna
be affected. Go ahead, sorry.
I'm not gonna. I think we have to be really serious about the over weekend risk with Trump. I think it's gonna be really. So I'm honestly like I kind of had to take a step back and rethink my whole approach here and strategy. You know, because over weekend gap is really a real issue now, and it's probably going to be an issue for the next year or so, until we know clearly how which way he's going to go with the tariffs and everything. But my general plan here is that I'm seeing so many signs of a major shift here in the USD cycle. I think we're gonna get a top in, be it this week or in one or 2 months. But I think we are going to get a top eventually on USD. That's just the way it works, right? And I think that move, that top will create very big trending moves in the Forex market, and I'm just trying to catch those moves. And I do see signs that, and I think it's going to be more clear next week that we are seeing that that reversal, you know. But it's too early to tell. I mean, looking at Euro USD, it's a bit early to tell. Obviously, the local structure is not very bullish. So we'll see what happens here.
Yeah. I think I'd like to see it going a little bit lower. I think this double top actually double bottom on the euro dollar can be quite interesting. If you are thinking about a reversal pattern, it's perfect when you do have a double bottom, because that double bottom then can eventually be faked out one last time, and that's going to be potentially the bottom in place, where again many people are going to be looking at the double bottom. It's broken, turn bearish, but eventually actually is going to be the opposite, and we are starting to approach an interesting zone. Basically, this structure at around 10, almost 101 can be an interesting level eventually where price could turn. It can take a while, and not really sure when it's going to happen. Personally, I would prefer to see a more clear break to the upside. It doesn't even need to potentially create a new high in here. Maybe.
Sorry, Pedro, I just have a phone call. I'm just going to take that. Okay, I'll be back in just a minute.
Okay. Yeah, no problem. Yeah, so as I was saying in here on euro dollar, so when you are looking at reversal patterns, what you want to see is, or at least what I like to see, is the indication that potentially price is starting to move into the opposite direction, but then still make one last movement in the previous direction that's going to confuse everyone before actually then price finally goes and moves into that level. Like basically pretending that we are going bullish in here is basically price starting to slow down. We have that initial kind of short buys in here that basically price breaks previous lows. Many people are going to start thinking that as price moving to downside, but then you do have that fast fake out in here where again many people are going to be looking at this as potential move to the upside, but then price actually finally respects the previous low that it was broken in here, right? So if you kind of flipped into the euro dollar, it's actually nice to start having this double bottom in here, because eventually price can hold it a little bit more. Many people are going to be looking at this level as a strong zone of support, or again lows that potentially more buyers are going to be jumping into here until eventually may have that move, right? And then potentially price can do something like that. So that's actually interesting too, that price is creating this double bottom in here. Yeah, Henry, you mentioned that tariffs are not new, that Trump was implementing that back in when he was president 8 years ago. That's true, but of course market needs to adjust and to adapt to all that situation, right? It's not just because something happened 10 years ago that there's not going to be the new movement, or there's no risk associated with it. And what you can see is that the market at this point is scared. Anytime there is any kind of news regarding to that, the market reacts and quite aggressively, and then eventually either kind of fakes the move as soon as the news is kind of rejected, or they say that it was fake, or there is a negotiation from the other side that okay, we kind of are going to do something that Trump is, we are going to well, basically what Trump is asking us to do, and these tariffs continue to be postponed in this situation. The market keeps adjusting. What I believe is that the movements are going to start becoming smaller and smaller in here. Victor, welcome, man.
Welcome. Thank you. Welcome,
Morning.
everyone. I didn't want to interrupt. By all means, if you're in the middle of something, do continue. Do finish. If I didn't want to interrupt. How are you doing today, Pedro?
Yeah, I'm good. How are you? Good to be back.
I'm fine, thank you. I am happy to be part of this market. Trump going. Pulling us one direction and then the other one just a couple of hours afterwards. I was wondering, did you finish your analysis before I ask you the question?
Yeah, I was busy finishing.
I'm just gonna jump in and interrupt and say I'm gonna be leaving for an hour. I'll be back. I'll be back in 1 hour. So see you guys later.
All right.
See you, Jonatan.
Take care.
Yes, I was gonna ask you, Pedro. Well, first of all, how are you doing?
I'm good. Good to be here on the stream. This year has been had a slow start of the year myself. I was kind of a little bit sick for a couple of weeks in January. Kind of slowed down a little bit. What I was kind of to get back into routines and shape to trading. But yeah, good to be back in here. And now I'm fully focused on my trading as well and everything else that I'm doing. So yeah, feeling good.
No, that's good to hear, Pedro. How has the actually I was going to ask you, does this environment where we are, where Trump comes with bazooka kind of news, right? There are news that are not only high impact but highly high impact, if that's a word, if that's a combination, very highly impactful on the market, and then it changes direction, right? That yesterday we were in the idea that he's picking a fight, and then afterwards, right at the end of the session, he postponed everything for, if I'm not mistaken, 30 days, in which time I suppose it's the time he wants, that in that period he wants to renegotiate, get to some deal he is satisfied with. Does this kind of market environment, is it beneficial for your trading strategy or not?
Of course, volatility is always interesting when you have it for both sides, for profits and for risk as well. But something that I like to consider myself as a pattern trader, but not just pattern in the sense that of identifying Quasimodo and that's the pattern. Like I like to see what's the sentiment in the market as well, to see where is the weakness or is maybe the opportunity, where is the maybe edge or value in the market to try to take a trade. So this is, of course, is a new dynamic that we need to adapt. For example, something that I mentioned with Jonatan is that at this point with Trump, we are going to be looking and seeing the market moving in different times of the day. It's not going to be just around big news event that you can identify in the calendar news. Maybe it's going to be, and sometimes can be in the evening when maybe many people are no longer even focused in the market or trading, because maybe in the US with the time difference, that's maybe when Trump is full on working and is giving press conferences and whatnot. So he may say something that is going to affect the market. So that's something that we need to adjust. For example, some movements that we are expecting, okay, price moved in one way during our day. So maybe tomorrow morning we're going to have a little bit of a reversal, and the reversal is going to happen at 8 p.m. Right, just because Trump is going to say something. So that's an opportunity that's going to be missed at least on the way I'm looking at the market. So yeah, it's just need to adjust a little bit to that perspective of especially the timings of the day that price is moving.
Exactly. What I understand from what you just explained is that you think because of Trump's being one of the, not a catalyst, but the source of volatility, and he doesn't work under the normal market hours or the usual market hours, you think that the time of the day, the patterns that we're accustomed to, that are going to be different under Trump, because because of his schedule, the market will move according to at least those things that impact the market, things he does, things he says, and things like that. That makes a lot of sense, because he has been a driver of volatility, of news and fear, risk averse. He is indeed a driver of the market lately. What do you do?
If I've, one second, like if we're talking about the pattern, like I'm still a price action trader, I believe you are as well. So our patterns are still going to work, in my opinion. Like it's just that price is going to, or when price is moving, that may be the different times of the day that we're talking about, or even the strength that the move is going to happen. Like instead of maybe taking 3 hours just to complete that move, it may happen in 5 minutes just because Trump said something. I think something that is for myself, what I need to adapt in here is literally just trade what I see and kind of maybe like the experience of waiting for certain timings of the day to because maybe there was a high probability that maybe price still wanted to wait until, for example, the London open in the next day or the US open, whatever it may be. That may not be, if I'm waiting for those times to potentially take a trade, I'm already maybe be right in that moment, because the move may just be gone. So that's the adjustment that I need to make.
Yeah, the usual patterns we're accustomed to, right? The windows, trading windows. That, for example, I know that my trades, when I in a trade at the end of London, I typically need to either close my position or adjust my TP, because if I'm not very close to it, I'm probably not gonna get it before the end of the day, the trading day, my day at least. And since normally I'm by default I'm not an overnighter or a swing trader, I need to close them at the end of the day. So I automatically need to know, okay, so and those patterns may change under Trump, because he, as we just you just explained, it's more dependent on his the times that he is doing his stuff, what he does best.
Exactly.
The other thing I was gonna
go ahead. Sorry.
No, go ahead.
No, that's what I was about to say. Like as you mentioned, you are closing your trades or adjusting stop loss and take profits based on that. Maybe around 5-6 p.m. UK time, but all of a sudden, there you go. You may miss the opportunity if you say something at 7 or 8 p.m. and all of a sudden the market go bananas and you may just miss it that target, that bigger target. Like, so one of the things that you can do, especially in terms of targets, maybe I have one. Maybe this could be one of those situations where having maybe a second target, just in case something happens, the price actually goes 100 pips in your direction. At least you may actually be able to benefit from it. If not, we just close the trade as usual. Thank you. It's just adjustments that we need to have in the market.
You mean to and do you do that? Have a actually, I don't know. Do you have like TPs hard in the market, or do you close them manually, normally?
I have always one take profit at around 2-1. There I close a certain percentage of the trade, and then I have a second one that can be a bit more dynamic, depending on the trade or the setup that I'm looking for. If it's just an intraday setup that maybe with a small range to trade, I'm even just take everything at the first target and that's it. But if I do think that maybe I'm in a good level, that there's a potentially bigger move from where I'm entering, yes, I'll have a second target that I'll adjust it, and then potentially either price gets there, or based on the price action that I'll see, potentially I can close the trade and the positioning there. But usually I have one first target standard at around 2-1.
I was gonna ask you, because is that something you're adjusting to Trump now being president, where your second TP is a bit more further away because you want to catch those impulsive moves, or does it does not change how your TP placement is done since Trump has been in office?
Yeah, that was exactly what I was mentioning. Like, so yeah, it started to adjust a little bit more into that. Just keep it.
I'm not sure if it's me or if it's you. Let me check what is happening. I'm checking my. I think it is you, Pedro, but it might be me. In the meantime, I am. Yes, I think it's. Can anyone in the chat let me know? Yeah, frozen. Who's frozen? Am I frozen or it's Pedro? Okay, all right. Thank you. Thank you for letting me know, Heidi. Yeah, Pedro, I think he will come back. Probably has some connectivity issue. Let me put my screen on. There we go. And let me adjust these just a little bit. There you go. All right. So, yes, we might have Pedro again with us later on, but that's okay. If he's not able to make it, perhaps it's going to be something. Just trying to look for the best layout. So as Pedro is perhaps attempting to come back, I am going to do, I'm not sure what topic exactly has been discussed so far, but must be a cold. Andrew says, we don't know. You're funny. Well, the first thing first, let's look at the let's look at the news for today. We have today's Tuesday, the 4th of February, and of course we only have those three red folders. Event dollar and Kiwi. Kiwi is way later today. The time here is GMT +1. So the just so you know, we have ADP coming up in about 2 hours. I'm sorry, not ADP. Jolt's coming in 3 hours and 45 minutes. Job openings. Now, that could be something that we could see some volatility in the market. Other than that, we don't have any other high impact news. Good. So let's start with the EU. I'm sure I saw Pedro was explaining, analyzing EU, and it's always interesting to see how others do it. But this is the analysis that I do, top-down analysis for anyone who is asking why and how. This is my view on EU. It's a good thing to start every day with a fresh mindset or fresh starting point. I do leave my objects, and by objects I mean structures on the chart all the time. But it's a good thing to revisit the structures of relevance, at least to me, every day, right? So I start on the weekly. I know it may sound boring to start every day on the weekly, and the weekly doesn't change that much, but still I want to have that panoramic view, have it present every time I start my session, right? And what we have here is we don't have anything locally to elicit a signal. We don't have a Quasi. Quasi hasn't been activated yet. Maybe I should make this a little bit bigger. We don't have a Quasi yet on the local or the recent local area, but we do have an entry order block, as you can see from the left, meaning this is the neckline. That would be the left shoulder, the head. We broke that neckline, meaning activating the Quasi, and we are currently in an area of weekly interest, right? Meaning if we get a weekly signal, we can go look to the lower time frames. And sometimes if we get a daily signal and we're almost or close to getting a weekly signal, we can leave that a little bit open, stretching that a little open, as holding it longer just in case by the end of the week we get that signal, we're already in it, right? So got a little flexibility there with the alignment. But it's good to know we are in the area of interest right now on the weekly time frame. So let's go to the daily. The daily we have, we discussed yesterday, we have a quasi, a reversal pattern, breaking the neckline, leaving 2 order blocks below as entry order blocks on the daily time frame, and price did exactly what we would expect. It used one of them. You don't know in advance which one it's going to use, but if it is going to have some kind of a reversal, even if it's not a complete reversal going all the way, changing the direction of the trend, whatever reaction is going to have, it's likely to be at one of those order blocks, right? So, and it did nicely so, using the ladder, the last order block in that quasi, and that's the basis of the move. We didn't get a signal, we didn't get an engulfing, we didn't get an outside bar or a pin bar with this candle or the next one, at least not yet. I don't think it's going to happen either. So that could be a possible signal today, tomorrow. New time frame for yes, Vinicius. We have a schedule of dividing everyone, having different segments. So it will take a little bit of time, but we because we have fixed hours, the audience, you people will surely in time know when we're going to be online, and perhaps choose whoever you want to get the information or the analysis from. So very observant of you, Vinicius. Let's see. So we have that entry order block on the daily. Let's see. We have besides that, I'm waiting because of, well, waiting is what we always do as a trader, but I'm waiting to see if we get a signal from, we just yesterday we tapped into that order block, and so far this time frame hasn't signaled anything, right? It hasn't given, as I said, it didn't give me an outside bar, pin bar, or an engulfing to tell me that the completion of that quasi. So I'm still waiting, and that could happen today, maybe tomorrow, maybe even a couple of days later. But that's one thing that I'm pending on. And if we go to the lower time frames on the H4, we did have a couple of order blocks on the quasi on the 4-hour time frame, H4, but that was invalidated yesterday. And we have Pedro with us again, at least in the background. Add yourself anytime you want, or should I add you, Pedro? Okay, all right, there you go.
Yeah, sorry, my PC just crashed completely.
No problem. Things happens. This kind of thing happens, all the time as we are live. So it's a common thing. I will finish the for the train of thought. I will finish the analysis,
Go ahead.
and we'll come back to what we were talking about if we can remember that. So we have an H4 order block based on the quasi. So on each time frame, as you have seen, on each time frame, you have different order blocks that the market can react to, and usually it reacts on all of them or most of them. And the best order blocks, you already see it coming, are the ones that you have overlap or confluence between different time frames, right? Where the H4 and the daily, they happen on the same place or the same area. So, but these order blocks have been invalidated already, is the one that I mentioned. This was the last one on the H4. So it has been invalidated yesterday, and meaning that on the H4 time frame, there isn't any area of interest where we could be taking a trade from. The only thing we have is we do have yesterday we formed a fresh order block, which by now is depending on your values or your criteria of a fresh order block, it may not be, it's getting at the end of its turn or limits of its freshness. Other than that, and price that is not seemingly to be ready to get to this order block in time, I suppose, for it to be a tradable, at least for me. We do have another one, fresh order block. So this is something I could be looking. We did close on the gap. That was something we were expecting, not exactly yesterday, but we started, talking about that gap that could be closed, but without knowing exactly when. So we do have an H4 order block, which is fresh. It does look, if you look at this, all this impulsive move reacting from this daily order block on the Quasi, I'm asking myself what can stop price to continue its its way up. What is there that could stop price? And the only thing I see here is, of course, we have the gap. It's been closed. We may have a retracement, but in terms of order blocks, the order block to be stopping price is a bit further up, meaning unless we have more information or something happening with the news in about 3.5 hours, we're likely to see price going up. At least that's the assumption that I'll be working on. So that is on EU, and I'm waiting for this order block to show me to be retested. It is in the process of being retested, and to show me that there is an area where we could be taking a long from, which would be a continuation of the retracement after the gap, right? Not a continuation of the impulsive move, which was in the direction of the gap, but a retracement into some structure before it continues to get perhaps a bit higher, before eventually we expect it to, we'll have to see when it gets there, but probably it will get into trouble as it gets into these supply zone, and we'll see if it continue its way to the downside. Basically, that's the expectation, or that's what I'm looking for on EU for today. What were we discussing, Pedro, before we had that little mishap?
Yeah, I think it was about the take profits and Trump, and if we will be expanding or not that last take profit, just maybe to benefit from any volatility in the market during that period.
I understand. The question that I wanted to ask, I don't think I actually asked it yet, but do you change your risk settings now that we are in a slightly, I would say it's not slightly, it's a markedly different volatility, right? Things are happening a little bit faster.
Mm-hmm.
Look at that gap. Are you adjusting your risk management because of this?
No, I have a quite strict risk management, risking a certain percentage of the account, and I basically just keep it like that. I actually, in reality, the way I do it is I try to classify the trade either in a plus or A, or basically just a B trade. I can get into more details into each one of them, of those setups, but basically, if it is a plus setup or something that I really think there's a high probability, not just high probability of success, but also of getting a good risk reward into the setup, I may give myself 3 attempts to get into that trade. If not, if it is just a quick, more intraday or kind of a scalp opportunity in zones where I don't really see that A plus setup, I just try 1 attempt and that's it. If I'm wrong, I'm wrong. I'm not going to try to re-enter the trade. So it's more of how many attempts I actually going to give myself to try to benefit from that opportunity. And if price starts to move in my direction, then I try to add more risk straight away. Either I lose the first attempt, second attempt, and still give myself a third time. But if I'm correct straight away on the first attempt, then I'm looking for ways to add more risk as price starts moving in my direction. And that's a little bit my approach of risk management.
But you're not changing it because of no market.
No, I'm not really changing it. No.
Yeah. No, you're not like lowering the percentages of the risk you're taking. taking half risk, things like that. You're
No, I'm
sticking
not
to.
doing that. I think that would be more in a situation depending if you are in a drawdown or not situation. I don't think like just because of the. I'm a bit more cautious in terms of the trades. I mean, maybe I wait a little bit longer before the execution of the trade, but I'm not going to really change my risk in that sense. It will be all of a sudden it starts to become too many variables that you start changing in your own process. That it may not be beneficial for you to even track all that information. As long as you feel comfortable with the risk that you are taking, and then if it makes sense to you, then just continue in there.
Yeah, I completely agree with you. Bringing more variables to your trading is something is underestimated, is underappreciated, or it's it's the risk, the downside isn't appreciated enough. Meaning, we don't see how bad. Typically, we don't see how bad it is, and it's actually very, very bad for your consistency, because you're bringing another factor in, which makes it more difficult for you to have a clear view. Am I doing well or not? It may be just those variation that is causing you to go up or down, while you're concluding that maybe I'm not doing things right, or I'm doing it well. Maybe it's not you, it's those variants that you're introducing to your trade. So it's I totally agree with you on that. How's your did you do the do you trade GU, right?
I trade yes.
Yeah. What is your sort of take on GU? Because I will do the analysis in a short while, but it's I have conflicting. I have not conflicting, but I have setups on both sides. And typically, what I do when I have that is I take both of them. Although it may sound weird, because of a high risk reward ratio that I have, I can easily take both of them. If like both of them are 1-5, one wins, I make up for the loss of the other one. But what is your take on GU, Pedro?
Yeah, you can share my monitor, and you can take a look into it. Before that, let me just reply to Alan, France, and Vinicius. They are talking, and apparently they are Brazilian. So if you are looking for some company as well, so we have our Portuguese community as well within the The5ers, and we're going to start actually live streaming, if not next week, the week after that, on a daily basis, at least from Monday to Thursday. That's the goal. So feel free to subscribe, guys, and to join the Portuguese channels as well. We have also a Facebook page. So yeah, it's a way to share ideas, to share anything related to the The5ers, of course. So yeah, feel free to join, because we're going to do similar stuff that we are doing in here on the main channel, but in Portuguese. So yeah, feel free to subscribe to the channel. Yeah, I'm Portuguese, awesome. But yeah, we can speak Brazilian. Yeah.
It's too bad that I don't speak Portuguese, because I would love to join your those session as well.
I heard you yesterday speaking a bit Spanish. It was nice accent.
Thank you. So yeah, go ahead.
So the pound, yeah. So that's an interesting one. Yeah, I have my empty chart in here. I usually don't really do an analysis on TradingView. But in my opinion, I think the low reacted from a good level, right? So when you have this move in here from the highs all the way down, I think it makes sense where price reacted all the way from this extreme. If you're looking, all these levels in here looked like they were already taken. This one was already a break as well. So yeah, it would make sense that as soon as price basically just starts breaking this low, that could be spiced to go all the way to the downside, and that happened, right? Basically that's what we had in here. So I like the low in here, like opposite to the euro dollar, where I do think that maybe a little bit more room to the downside. On the pound dollar, I'm okay. Yes, of course, price can continue to move lower and eventually can start aiming towards these levels, but I'm quite okay where price is reacting right now from here. So now it will be more of a question if price is actually already ready to completely break, Mike. And I think breaking this high could be something to look for. Start looking a bit more into this lower time frame. I think breaking above this high, it will start turning or giving a bit more signs signals of a bullish reversal in here, until we actually have that maybe that structure being broken to the upside. I think this could be just retesting this level, and it's actually a good level as well. So I also like where this high reacted from. So basically, looking a little bit more into the lower time frame or kind of all the structure here, I think there was a great opportunity to look for longs once price reacted from that level with a target somewhere at around this high. And that's basically done. Like basically the move is done. So now we are back within two structures, which both of them make sense to me at this point. So I need to see one of these two structures being broken either up or down to start giving a little bit more of direction where to, what to expect next in here. So yes, that was done. Price also reacted nicely from the structure in here. There's maybe still even a little bit of a zone slightly higher where Europe or this pound dollar could still go towards to, somewhere closer in there where could still react from. But the reaction was nice from that zone. It's kind of I call it supply, maybe call it order block, whatever it may be. But it was a good reaction. The approach was also good. And now basically I'm always looking for price to react or get closer to the extremes. Right? So extreme to be something somewhere in here, but price already reacted several times from that level on the way up. Is there anything in here? Perhaps there is, or maybe this was enough, and that's done. This was one of the left zones that was left behind as well. But maybe something in here, but maybe price had already reacted from that level. So personally, I think we are a little bit in the middle. I don't really want to short from here, even though price could do it. I would prefer to see price getting a little bit closer to these highs again before potentially look for a short. But we start getting into this level where we may start having a range, and price may bounce a little bit from here up and down. And I don't really, I'm not the biggest fan of trading this type of moves. I like to trade the first reaction from the level and then the second reaction from the high. That makes sense to me. Everything else in here starts to become a little bit more a ranging move, which is not really the biggest one. But if you start looking into the lower time frame, is there anything in here? Potentially this level in here is still fresh. Maybe the size never really reacted from it, or price can even go slightly higher. Yeah, it's a little bit of in the mix. I could see maybe what you're looking that maybe you can find some short opportunities a little bit at the rise. We actually managed to break this low now, so this can be already a little bit of a breakout structure in here, which can lead into potential shorts from that level. If this low is my target, or if I think that this is the last low and price is ready to completely go to the upside from here, not really sure. Maybe I would prefer if price had moved a little bit deeper into the structure before actually looking for a long, but that was okay as well. So yeah, it's a tricky one. Well, for example, something interesting that we can compare between the pound dollar and euro dollar, especially with yesterday's move after the gap, like when you are looking at the gap on the pound dollar, that the price just pausing here and euro dollar went all the way to the extreme, it's exactly more based on what happening here. Like basically the pound dollar, when it started to move away, it already made this big deep move into this basically structure that was in there, and then you start creating some kind of price action around this level before the move to the upside. And euro dollar didn't happen like that, right? Euro dollar literally created the bottom, but then price started to trace it away from here, leaving out this level behind, which is basically where the euro now reacted from in here. This is something that you can start identifying when price is moving away, just to see where are the orders left behind, and where potentially can be your target as well for a move, especially if you're catching the short in here. But yeah, personally, the euro dollar, the pound dollar is a bit tricky. If I was about to trade a pound pair, I think I would prefer to trade the euro pound, which I don't even know where it is in here. This is euro Aussie, euro card, euro pound. Like I think euro pound is approaching a better level, somewhere around this level in here after the big drop, and we actually managed to break some structure to the upside as well. So if I was about to trade something in here, potentially could be a long in here. But if euro pound wants to go higher, then pound dollar may wants to go lower again. Don't forget that you do have the Bank of England this Thursday, so that's basically the last central bank that is still going to announce their interest rate. But yeah, it's a bit tricky. I'm waiting. Sorry for so much talking without really giving an answer in here. But yeah, don't really have from today's intraday perspective. Okay, let me just answer that question. of the intraday perspective. Okay, price reacted nicely from this level. All right, so that's okay. I think this may be another block that maybe many of you are looking for, and it did manage to break slightly below this low. Because I think this value is still fresh, I would prefer to see maybe this size being taken. So I'm not really comfortable just taking a short from here when I know that we have all these size that price can still go slightly higher, and there are still orders left behind in there. So I'll prefer to see price moving a little bit higher, creating a kind of a compression move in here a little bit more, and eventually potentially react from there and start and potentially moving to the downside. I'll prefer to do that instead of looking for a short in here. But I'm okay if price just wants to go down from here. I'm just not going to participate in here. Yeah, that's basically it.
Yes, I actually it's a nice trade or a nice setup on Euro Pound. You mentioned something. I'll tap into it in a short while, or maybe I should put it right away because that was the last, not the last, but the previous one, before the last one pair you were looking for. On the weekly time frame, as many people know how I do my analysis, I start, in this case, I saw that I have a monthly order block already. It's not fresh, and it isn't part of a quasi, so it's not something that I can produce a signal for me, but I know that there is a structure there that is based on the monthly time frame. So I know, panoramically, even bigger than panorama, I know that we are in an area where we could have those impulses going up. Even if the trend doesn't change, we can still have those buying pressure coming into the market on the higher time frames. On the weekly, we do have there is a quasi in here. Let me see if it is a quasi specifically 69.4 and 67. That isn't, so it should be somewhere around here, but it doesn't matter. It still is. There is a quasi in there, meaning it. Let me see if there is any of my rules that are making it impossible. There's 1, 2, yeah. So actually, this is an entry order block on the weekly time frame for me. So we are at a very interesting area to be looking for that reversal on the higher in the monthly, and the monthly not so much, but the weekly for sure. Even though it has been retested already, so it's not an unmitigated order block, because it's in a quasi, it still has a lot of power, a lot of players waiting or traders waiting to buy that up. And that actually doesn't surprise me that we had this buy. I don't know if this is everything we're going to be getting from it, but it's very interesting because the weekly time frame hasn't been invalidated, as you can see. The monthly, we are within the monthly time frame, and if we go to the daily, we can find actually a daily order block. So that's the beauty of the market, right? The fracture nature of the market, where you can see the same pattern on different time. As you zoom in, you keep on seeing the same pattern again and again, and that's a thing of beauty, in my opinion. All right, so we have this would be considered the head in my way of breaking down the market. That would be the left shoulder. I know it sounds almost like it looks like a double bottom, but those are the rules I have, and it's a Quasimodo, so it's not a head and shoulder where they have to be, symmetrical, things like that. It needs to be asymmetrical to be a Quasimodo. So it's that would be my areas, and that is a valid entry order block, right, on the daily time frame. So now we have alignment on the monthly, although the monthly isn't a signal, to be honest, but the weekly and the daily are telling us that we are in the. Let me see, did we get a weekly entry? Well, you could see here where the buyers took over, right? That could be considered a weekly weekly signal. At that candle where we have that outside bar. So we do already have a weekly signal to go long, meaning, as price doesn't go in a straight line, after it is signaled by creating that candlestick pattern indicating, they're shifting who is in control. You can, as price does what it does, that zigzag, you can be buying those bottoms those retraces as it is going up, and that's exactly what I see in this trade, right? We could be waiting, or this kind of move could be what we will be seeing in the following sessions. That is in the weekly time frame, so keep that in mind. It could take a long time before it pans out, but we do have 2 order blocks on this pair that are promising. Those are the entry order blocks, and let me mark them like so. And we are currently in one of them, right? We already tapped into one of them. Nobody really knows which one is the one that is going to be, if we are going to have a reversal, which one it is going to be using. So I trade them as if this is the one. I don't know which of the 2 will be. It will be, but I will be trading this. So I'm looking for current daily candles to signal a shift in who is in control. That hasn't happened yet. It may happen today. It may happen tomorrow. It may not even happen. That's fine. But I'm waiting for that to happen to get a signal as well on the daily time frame. If we go to the lower time frame, you can swing. You can lower this all the way down to whatever time frame you're comfortable with, and you can see the shift here right after the gap. Right, the gap, it's a bearish gap, meaning it's a lot of selling pressure. That's how gaps are formed. And the next structure that is being formed is a bearish order block, right? So far up to this point, the bears are in control, right? Until we get to that order block, that daily entry order block on the Quasi. See how the H4 changes completely? Now we're forming the order flow changes. We form a bullish order block, gets retested, and we form on top of that another order block on the H4 bullish one, right? That's the signature. That's the sign. There's a shift. Is it something that's going to last very long? We don't know. But as long as it is, in that order flow, bullish order flow, our job as traders is to follow that order flow, follow what the market wants to do. Is it doing it at a relevant place? It is on the daily time frame. And so this is something that's quite interesting to me. I would be, looking for the first order block already. This is not a pair that I typically trade, but I would be looking on this wick already. I would have been looking for that entry because it has everything that I need to keep on going to the lower time frames. And you could wait for, more structures to see perhaps if it takes out. That's not a wick, by the way. That's not a Quasi. The Quasi neckline is all the way here on the H4. But it doesn't form Quasis on all time frames necessarily all the time. It may skip a couple of time frames in the process. It's a fluid thing, right? Sometimes it skips the 4, it does it on the 8, sometimes it does it on the 3 only, or on the H2, etc. So you have to be a little bit flexible and fluid with that criteria. But I like this a lot, and I think we could see some upwards pressure, at least for the time being. Of course, we have that central bank interest rate decision this week, so that can change everything we see here. But if not, then I could see this going higher and perhaps maybe even go lower, but then breaking. I would be waiting for that break of that structure, perhaps for a move higher, right? Something like that. If this is going to be the low, is difficult to say in advance. There's no way for us to know that. The only thing we need to do is, watch the structure and follow the structure. Listen to the narrative. Is it forming those reversal patterns on multiple time frames with alignment? Then that's the best guess we can have to know that this has shifted. That's a very nice setup, by the way, Pedro.
Yeah, I like exactly what you are looking at euro pound, sorry. And I do like as well, and I do have as well, that the second level underneath on the daily time frame, closer to the lows, that eventual price can also go there, right? I think you can have a reaction. We have John that actually mentioned that euro pound is a chopping block. It is true. It tends to range quite a lot. But that's the thing with these assets, is that or you can create an edge and trade them when you do see the opportunity. And the opportunity is, for example, when with this type of pairs, when they expand, they usually kind of tend to come back to it, right? Until eventually they kind of start to create lower highs and higher lows, and all of a sudden starts switching back trading just within a smaller range. But in this particular case, we had a really big expansion beginning of last month, and now price retested back into this level, and potentially we can go back and retest those highs at around 0.84 something in there, right? So that's the opportunity that you can look in here, and also one of the best moments to trade out these assets is when you have some relevant news. For example, if you have an employment CPI, something like that in UK, or in this particular case when you have central bank decision from the Bank of England, that's one of the weeks where you may want to actually be active on the euro pound, because we are expecting some movements specifically on the pound and not on the euro in this particular case in here. Yeah, so yeah, if I was about to trade euro pound, I would say that maybe there is maybe 3 or 4 days in a month where you can find opportunities in here. And thank you for a comment as well, Abdul. Yeah, thank you for a comment.
Hit the like button, everyone, if you like Pedro or any other host or us being here. Hit the like button, let us know your appreciation, show us your appreciation that you like what we are doing and it is of value to you. That is how we understand in what direction we need to expand. So we do appreciate your likes. Thank you for that. And Vinicius is see you later, Vinicius. Thank you for being with us. We appreciate that. We have let's see, as you were saying, you said only a couple of times a month you would be trading pound. Is that correct?
Euro pound, not pound dollar. Euro pound specifically.
Okay, I see.
Yeah, pound dollar because it's related to the dollar. Of course, there's way more opportunities. But euro pound specifically, I think and then if you start looking at when do the news in the UK come? Usually it's a week that where you have unemployment, CPI, retail sales, whatever it may be. Usually they are concentrated in a single week. So you are going to be expecting, and usually they are in the morning, like at around 7 a.m. in the morning. So we're going to be expecting some volatility on the pound specifically, and then whenever is the central banker do the decision, like, or because that's the moment where you want to be able to be active on minor pairs, in this case euro pound. Otherwise, if you see that it's going to be something really specific on the dollar, that's when then these minor pairs just range and there's no opportunities, because euro and pound are moving in the same direction, which leads into euro pound just ranging. There's no moving there. Those are just small clues that you can be aware of when trying to trade these other pairs.
Yeah, that makes a lot of sense. The same goes with the time of the day for the euro dollar. European, the euro, and the dollar, the New York Open. Those are the relevant times that the movements typically come. Not all the time. It's the same analogy or the same idea behind it. That you have to look at what the relevant time windows are for that particular economy, right? And in the case of the pound, it's when we have those numbers coming out the same or close to each other on the same week. So it makes a lot of sense. I don't particularly use that timing, but I think I should take a look at it in my data to see if there's something that I can tweak or add as a rule to not trade them or do trade them, depending on how many news are coming out on that particular week. That could be a nice edge enhancer of a rule, of course.
It's just going to help to avoid these ranging markets. Basically, it's going to help you to avoid these moments where price is not really moving. If you actually kind of don't really backtest, but just take a look into where these big moves happen. Like when you're looking at the euro pound, if you zoom out a little bit, when did you have those big moves to the upside, for example? Like try to see when that happened. And then you're going to see which, like, around what time when that opportunity happens, and when you have those big ranges when you want to try to avoid them, basically. But go ahead. Let's look at code.
Yes, I'm just preparing as I'm listening to what you're saying. We have the Bank of England actually coming back to that topic. It's on Thursday, right? If I'm not mistaken.
Mhm. Yes.
Let's look at that. That's on Thursday. It's the
Yes.
bank interest decision. Do you have any expectation on pound, on doing one thing or the other, strengthening or weakening? What
Yeah, we'll see.
I don't
Honestly,
have a
they're expecting. Yeah, they're expecting to cut rates again. The situation in UK again is not the best, but it's getting steady a little bit. We had a big downfall on the pound for the last couple of months, which bottom in that level that we just talked about. But we'll see. Like we'll see what's going to happen on the pound. Yeah, basically they are expecting a 25 basis cut this Thursday. We'll see afterwards.
and all right. So, do you think that's enough? Will they? What's the expectation? Will they keep cutting? What is the down the line? What's the expectation? Have they given any guidelines?
I'm not really sure how many cuts they are looking for in 2025, to be honest. And maybe we can get that information. Maybe what's the expectation at this point? For them, the Fed is around 25 basis points to 50. I think the Eurozone still is expecting another 50 basis points until the end of the year. The UK, I'm not really sure what's the expectation at this point. But to be honest with you, I don't really recall. I start trying to recall by memory where is the CPI at this point of inflation, if it is decreasing or increasing. It's just data that you can collect quite quickly. But yeah, we'll see. Like the UK is, especially with Trump, like Trump is threatened the Eurozone. He kind of still kept the UK on the sidelines. But if Trump also starts threatening the UK with some tariffs, it's not going to be pretty for the UK for sure.
That's a little bit of an understatement, but I like it. Yes. Well, on GU, maybe I can do the analysis or what my take is, because I think GU is a little bit more difficult to trade, and it's a pity because we've seen a lot of strength in GU in the last couple of days, closing the gap before euro dollar, making that bullish engulfing, while on euro dollar. We didn't see that move, right? It couldn't be an engulfing, but still it didn't come higher than the previous bar, while on GU it did. So that tells me that the possibility of the pressure on GU, buying pressure, is much higher. However, it also has more difficulties going up, and I will talk about it a little bit. One thing I want to indicate is that the area we are reacting from, right, that low that was put in on mid of January, was in entry order block on the daily, and the question when price comes back into those areas is, when price got there, did price have a shift in order flow? Did price start forming bullish structures, bullish order blocks, right? And if I were to ask anyone in the audience, let's see if they're paying attention. If I were to ask, what happened to the order flow when GU got into this entry order block on the daily time frame? Did we or did we not get a shift in order flow? That's a question for our members in the audience. Let's see if who is the fastest and who is willing to show everyone that they are not only paying attention, but that they are knowledgeable in order flow. Yes, we did. Henry says, indeed, Henry, we did see a difference. You can see clearly that before, right, this was the last bullish order block that was created, and it was quickly negated, quickly taken out. And while the bearish order blocks that were created, they still because price was going lower, they go hand in hand, those two things. But the wicks, you can see on the wicks as well, that we were the sellers, and by the size of and the legs of the movement, all of those things tell us that the sellers are in control. And what happens as soon as we get into that area doesn't happen this beautifully all the time, but we start building bullish structures, right? We got one, we got a second one. Look at that beauty of a retest right there. I mean, that's a textbook opportunity for us to be longing that, because it created that order block. It comes back, maybe an hour, maybe half an hour, and that's it. Off it goes, and goes up to the direction of that structure. Very, I would say very easy, but in reality it's not that easy to catch those. But it looks very easy, and to a certain degree it is easy as well. And we kept on creating the bullish order blocks, even though this is a sort of a borderline, but it is still an order block, and it hasn't been negated yet. It hasn't broken yet. What we do have is that in the process, as price was pushing up, we left some order blocks, some bearish order blocks above us, right? Indicating that the impulse or the order flow, the pressure that created, this move was coming to a deceleration phase. And not necessarily it stopped, but it's no longer, you can see the oscillation, and we are getting to the highest point where the buying pressure isn't dominant anymore. And we have those, that's why we create those bearish order block. And now we are in a very tight area, I would say, right? We have, of course, the bearish order block that was yesterday, bullish order block that was retested yesterday, was violated by quite some, but in the end it did hold, wasn't invalidated, and we end up creating a new one, right? So it tells me that, that we have a chance for the bullish here to keep on pushing higher. But the thing is, the structures to stop us are quite nearby, and that makes it a little tricky, because we might have, as price is getting into those areas all the time, we might see some selling pressure coming back. And so far, these structures, these bearish structures, have been respected very nicely. So it's which one of the two sides is going to win. It's kind of difficult to know in advance. What I do is I follow both of them, right? So whenever price comes back into a bullish structure of a demand zone, I buy it. As soon as it gets to a bearish structure, I don't close the bullish one. Sometimes I do, but not necessarily, because there is a bearish structure there, and I see a signal on the lower time frame. I take those as well, and obviously both of them cannot win, so I will lose one side. But on the long run, I'll end up winning, because of the risk reward ratio that I typically use, which is much higher than usual. All right, so that's not than usual. Use more than, it's higher than, well, I don't want to compare to anyone, but it's high. Let's just put it high. I'm looking for at least 1 to 5, 1 to 6, and if possible, a bit higher. And sometimes I do catch those bigger ones, but those are not as frequent as the 1 to 5 ones. So what do we have on GU? It's a little bit tricky, right? I'm able to trade both sides because I trade on small risk, and I take many attempts, and my signals are very, very selective. So I may not get signals even though I'm waiting for one. But if you are, let's say, a trader that's trading 1-to-1 or close to 1-to-1, then this might not be the ideal area or setup for you, because you have opposing setups that are roughly equally probable of working out. And which one do you take? In that case, you might as well just let it go and look for another opportunity. But in my case, I'm able to still trade it. What I want to say is this: so we have the push down yesterday. We had that with gap. The gap was closed, and where did price close at the end of the day yesterday, right? Did it close indicating that the sellers were still in control by the end of the day? The sellers, by the sellers I mean the previous bearish bar, right? No, the sellers were not in control because the buyers were able to close above the open of that candle, meaning, you know, it creates that engulfing, of course, that order block. But to me, it means that there's a shift there, right? A shift of who is in control. And so that's the reason why I would be looking for a long in this area. But equally valid would be a short from this area, because this is also a place of a supply zone. There's one caveat to this zone though. The movement, right? This is the push up, and this is the, I would say, maybe I should put it like this. That's the movement that created that order block. And that movement, we already had the retest of the structure, right? This is the retest, and that's the intended move to catch. So we already had, so this order block has been in a way already used up, right? It's effect, its expected effect on the market, in my opinion, has already, you know, we've already seen it. So the play is basically out. That is one reason where you could say, well, I will not use it. And if I don't have that daily, and then the reason would be, why would I be looking for that short if I don't have that? I don't consider that daily order block to be very relevant anymore. Well, the reason there is still a short, in my opinion, is that we did get a quasi formation on the H4. Right? Let me mention this. Let me show this. We have an uptrend, established uptrend. Would you agree, everyone in the audience? We see Jonatan is with us. Hi there, Jonatan.
Hey guys, how's it going?
Fine, thank you. How are you doing? How's your foot doing?
My foot is doing better, but I just had a guy over to look at the my heating system, the pump that is, you know, driving everything around is broken. So I'm sitting here in I think it's like 16 degrees inside. It's quite cold. Yeah.
Get a blanket.
Yeah.
Yeah. Okay, guys, I'm going as
coming
well.
back to the
Now that Jonatan is back, so it was a pleasure to come back here, and yeah, I'll be back next week as well. So,
all right.
Enjoy, guys. With Vitor and Jonatan.
We'll be very anxiously waiting for your return, Pedro. Thank you for all your good insights that you bring to us, to the community. Thank you.
All right. Thanks, Pedro. See you next week.
Yeah. Thank you. Bye, guys.
Yes. If this is the reason why there is a short opportunity as well on GU, right? While the buy is a valid one, there's also a valid reason for us to be looking for a short, and that is the quasi that I was mentioning. We have an established uptrend, and the neckline on that quasi is this place where I know it's a little bit difficult to see, but you can see that there is a quasi on the H4 indicated there, and we broke that right after. As you guys know, after that is broken, I'll look for structures that are, you know, that may indicate where price might make their reversal and creating that right shoulder, right, on that quasi. And we have a quite wide area, which I don't like, but hey, it is there. So that's what the price is telling us, that this structure on the H4 is a potential place where sellers will come back to the market. And we have if you come look closer, we do have an order block there, which is let's see, it is fresh, and we are testing it as we are speaking. Well, in the last couple of H4 order blocks, we've been testing it, and if we have a shift again going bearish on the lower time frames, that could be indication that we might get that right shoulder here. Doesn't mean it's going to happen necessarily, but I'm looking for, we do have a reason on the daily. There is an order block there, although it's not the typical one that I would, want to trade because it has made its move already. Normally, I will disregard it, but there is an area there. It is the second time around. We will get some selling pressure from it. But on top of it, having that H4 order block, I'm not ready to go short, but I'm looking for that possible short reversal happening, perhaps today, perhaps tomorrow. Who knows? We'll have to see. And if I go slow to lower time frames, you can see that I have indicated. For example, we have this area on the H1, right? We squeezed with some wicks, but eventually reacted the way we would expect from a bearish H1. It was fresh and it did its job, although not so neatly with those wicks, didn't contain price as neatly, but it did what it was supposed to do. So the market does signal us that, a short may be coming up, maybe not yet, but we could see some selling pressure coming on, and we'll have to see, will that be enough for price to, push much stronger to the downside, and a continuation on that gap we saw on Monday morning, the Asian session, basically when we open on Monday. Will we get that continuation? Maybe today, maybe tomorrow. But I'm looking at that, even though we have both sides. I have a buy setup and a sell setup. Remember, because of that gap, I know it's been closed and we can have some retracement, but the fact that the cause of that gap, right, the fundamental situation or environment, market condition, hasn't left us. It's still here. We may have Trump may have the market some time with postponing it for 1 month, but we're still in a place where the market is a little jittery, because who knows what's the next headline coming out of the White House these days. And that's the reality we're living in, where the market condition is that's the market, and that was the reason for price to go much lower. And it does make sense for price to continue on that path, maybe later on this week, maybe today, maybe later on. So technically both setups, although they're in opposing direction, both of them have merits to them, and in those occasions I take both of them. That's what I wanted to show on GU. Are you in any trades, Jonatan?
I'm gonna enter orders on EURGBP. I can share my screen here and show you. It's show what I have. This is this is an idea that the end of a couple of weeks ago. How long ago? So maybe 2 weeks ago we started looking at this idea, and you can see that price has followed general direction of that idea quite nicely into. So we can look at the 3-day here. We have two main levels here that I'm thinking we're going to be trading between, and we have this. It's not a perfect channel, but if you look at the daily, you can kind of see how this price action here fits nicely within the channel. And then you have that break above, and you have the reload zone here by putting the fibs from this low to that high. We have a very good retest of the reload zone here. And what I like when I go into the 4-hour is we have a what I like to see as a very good reaction. This is the exactly type of reaction that I want to see inside this area, where you have price comes down and then kind of starts to kind of break structure down here. So the idea that I'm thinking of is lagging a bit here, but the idea that I'm thinking of is entering around here. I want to take profit up here. I also like this level quite a lot, that untested level right there. And go in here and you can see that it's a nice untested level here, where we broke down here and we have not tested that level since breaking down. and that aligns nicely with that high time frame level. So this is the idea that I'm currently looking at. I'm just need to update. I need to log back into all the MetaTrader accounts and update my copy trader to make sure that everything is in line. But yeah, I'm gonna start building a position here. So small position here, and then if we get something like this, I will add more to that and probably go in with the full initial risk. So I'm thinking probably a 3R trade here. I want to have a wide stop loss, but we'll see. I mean, really, I want my stops to be below that one, but we'll see. Well, I like it. I like the structure.
Actually, I don't. We were just looking and talking about that, Peter and I, before you came in, where I saw some very nice alignment on the monthly, the weekly, the daily, quasis, fresh order blocks. I mean, you name it. It was screaming to me, buy me,
yeah,
buy me.
Yeah, this is really good monthly. Looks very good weekly. It's an extreme move as well. I mean, you have a big move to the upside and then straight down. So there's a lot of different types of different types of setups you can do here. You have the break and retest. You also have a mean reversion type of trade. It's yeah, there's a lot of things that aligns with this definitely.
I will be having. I'll be taking a break, Jonatan, with your permission and with the permission of everyone in the audience. Let me check if they give me permission. But I'll be coming back in about 48 minutes. We leave you in the good, competent hands of Jonatan.
Yes.
And hidden bullish divergence on gold price action. I will be checking that in the background while I have my break. And I'll be with you guys soon again. See you guys.
All right, take care.
See you later.
See you soon.
Bye-bye.
Okay, I need to figure some stuff out here. I need to update my trading copier. I need to log into my trading view on that account. So what I do is I'm trading through a personal account. So the personal account that I have with Oanda right now, it's only 5K. But the reason why I have that on Oanda is because I can log into Oanda on TradingView, and then I can connect that Oanda account from TradingView to CopyTrader, and then can connect all my prop firm accounts to that CopyTrader. So I'll be trading within TradingView. Works very well when you're swing trading or swing trading like I am. If you're trading low time frames, if you're scalping with day trading, not a good idea because the prices do differ from different exchanges and different brokers and different liquidity providers. So let me just get that set up. That's it. Trading. Yep, I think that's it. The reason why I didn't show you my screen is obviously I don't want to show you all the login information. What's my favorite copy trader? I've only been using one copy trader, and that is Forex Solutions. No, Victor has a free one, but then you have to run all of the instances of MetaTrader on every account. But I think he has a virtual VPS, a virtual server that works. But this is the trade that I'm going to see if I can take a position on. Excuse me. It's called Forex Solutions, and we're not officially, like, it's not. We don't at the5ers. We don't officially recommend any copy traders, and we're not gonna officially recommend that you use a copy trader. But we're not gonna ban you if you use a copy trader, unless you do weird stuff. Don't be weird. Okay. Let me see. Will I enter position now? So let me take a step back and can I go through my my checklist. Where's my checklist at? Look at this fat book. In June, I'm gonna take the test, guys. All of this. How many pages is this? 700 pages. I'm gonna learn 700 pages of this, which is just patterns and price action, double tops, bullish engulfing candles. Very interesting though, I love it. What was I talking about? Checklist. That's right. Here we go. This is it. A checklist. P-trade checklist. Have you have you meditated and journaled today? No. Nope. I have not. Have you done your weekend plans? Have you done any trading plans on the weekend? No. I have not. Let's just for today, can we just ignore that? Let's just remove that part from the checklist. Reason why I have not meditated or journaled today is because I've been freezing to death and trying to basically survive. My heating system has failed me. And have I done any weekend? No, I don't do that anymore, actually. I don't really do that anymore. So I guess yes, because I kind of haven't made plans. Yes, exactly. This is you're right, Harish. That's 700 pages of it's the CMT Chartered Market Technician exam. Yeah, I like my books thick. Right. It's okay. So going on. Is price within an area of interest, which to me means high time frame levels marked during your planning? Yes, that's right. It's within the area of interest. That's a check. Is the trade in line with the high time frame trend? Let's take a look. Yeah, do I look pale? Oh, let me fix that. Oh, look at that, I'm yellow. Weirdo. My fiance saw a short when I had this light on, and she basically called me ugly. So now I need to like adjust it a little bit. Wow, that's bright. Really, you think that's better? I will tell her that. Do that. Good. Okay, is there a break of structure or reversal pattern on the low time frames within the area of interest? Okay, we go down. Is there a break of structure? Is there a break of structure? Is there a break of structure or a reversal pattern on the lower time frames? Yes. It's a double bottom. Double bottom. It's a higher low. And look at that. Is it within the reload zone? Hell yeah, it is. Nice. Do we have a strong thrust candle breaking a key level? Back to the 4 hour. Do we have one? Not really. Not really. Is there a clear breakout level that can be used as entry? Actually, this is rather old checklist, but it's definitely valid. I would say no. So there's definitely more developments needed here. Okay, reminders. I have reminders. By the way, this watch list is based on the boot camp trading week that we had in November last year. If you guys remember, that was highly successful, and thank you all for joining that. When we're gonna have many more like it. Part of this live stream. Okay, position size and lot size correct. The reason why I have that as a reminder, check it right here, is because once upon a time I forgot to remove, or I accidentally added a 0 to my lot size. So instead of taking a 1 lot, I took a 10 lot, which rather problematic. But this is important. This is a very important reminder. Check emotional state. Am I making a rational decision, or am I acting on impulse? Yeah, I'm gonna be honest. I'm definitely acting on impulse. Yep, I saw this chart and I'm like, yeah, I've got to enter a position. So I think I'm definitely acting on, yeah, that's my checklist. I have it right here. Feature checklist. So yeah, that's that emotional, checking that emotional scale state is definitely very important. And this is also probably one of the most important questions that you can ask yourself before entering the trade. Will this trade, if entered, be marked as according to plan or not according to plan? It's definitely going to be marked as according to plan. Within the area of interest, look at the 4 hour. What type of confirmation am I lacking here? What type of confirmation am I lacking? Well, I think what I might want to do here is well, you know what? I don't need any more confirmation. This is good. This is really good. I'm gonna stop building a position here. What I first need to do though is I need to just update my some of the accounts here. It's gonna log in again here. Give me a second here. There's many different accounts that needs to get updated on different firms. All right, so that one is updated. Let's go one more. What about ADX? Yeah, let's yeah, well, sure, we can take a look at that. Perfect. How many accounts am I trading at the same time? Take a guess. Take a guess. And the one that is closer wins. Win bragging rights. Sorry, but I can't give you anything more than that. Not working though. 836. Okay, whatever. I think that's it. I got seven different accounts. Close though. I read you saying not according to plan. It's missing more than 2 of your trade plan, trust candle, and emotional checklist. But you would be knowing better. We can't say. Well, yeah, you're definitely right. But this is different though, because this checklist is for a specific system, which you remember a while back on my channel, I did like a week where I explained the RZ method and the RZ reversal system, and this is that RZ reversal system. But now, when I'm trading more this strictly swing trading approach, I'm slowly but surely building positions. I'm starting to build a position within the area of interest, and then with more confirmation, I'm adding to that. So just give me a second here quickly, and I will, if everything is correctly defined. Okay, so that should be it, right? So you can see here I have an order in. My stop loss is 60 pips below entry. My TP is currently 180 pips above. So this is, I've just entered the position right here. What I love about this new structure with the live trading room is that you'll be able to see many more of my trades actually taken. Because what happened in the past was we were only live, my time between 2 and 4. And I very rarely do I trade between 2 and 4. So you didn't really see any live trading from me. But with this new structure where I'm basically going to be with you guys throughout the whole day, you'll be able to follow along with my whole trading process and my whole structure that I have throughout the day. And even as a swing trader, I am quite active with my, with my planning and my trading on the, as a whole. But as you can see here, what I did now was I entered a position that is worth around, so on my risking, on the Orlando account, I believe I'm risking like $50, and that is 1% on the account. So the Orlando account is, I believe I got 5K in there, so that would be $50 if I'm not mistaken, and that is 1%. So it's 1% on the personal account, and then it's going to be different percentage based on what accounts I have. So that 1% turns into like 0.12 on one of the biggest funded accounts, and then on the evaluation accounts, depending on what evaluation it is and what program it is, it's either 0.25% or 1%. And then I got other accounts with other firms as well, and depending on the rules of the program, it's different risk. But I'm applying on the funded accounts, I'm applying the fractional risk approach that Victor has explained many times, which basically means that, and because I'm a swing trader and I don't trade very often, about once a week or twice a week, I look at about once or twice a week, I look at what is my distance, what's my allowable drawdown, what's my drawdown, and then I take that drawdown, I divide it by 10, and that's the number that I'm risking in dollar amount, and I'm doing that once or twice every week, depending on how much my the equity and balance of that account changes. How many pairs do you trade? Well, let's do a count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 4, 5, 6, 7, 8, 9, 30, 31, 32, 33. I'm not trading that, so 31, 34, yeah, probably now 32, 33, 4, 5, 6, 7. I would say about 40 different Forex pairs, including indices and gold and silver, and then many altcoins. And then you probably ask me, like, how can I trade that many pairs? Well, I'm trading the higher time frames, so nothing's happening on the high time frames very often, What is my favorite pair to trade? I don't really have any specific favorite pair that I'm trading, if I'm gonna be honest, but there's one specific pair that I really like. It goes in. It depends. It depends on what cycle that Forex pair is, and it depends because I love. Yes, that's right. Henry knows me. It's Euro NCD is a Forex pair that is consistently giving us beautiful price action. Is the way Euro USD builds cycles and the way it's printing those structures is just, man, it's beautiful. It is so good. Let me show you what I mean. Okay, Euro NCD and also some of the JPY pairs. Back in the day, that was the JPY. Like, we can look at. I love trading AAD JPY. Like in 2020, I believe 2020. We can go back. We can look at that. Like back in this time, the AAD JPY pair was just such a beautiful pair to trade. Look at this. I mean, look at this whole trend right here. It's such a good, like all the way from like 2017, 18, and 19, and then throughout 2022, you had such beautiful moves on ADJPY. This was, I believe, one of the trends where I was able to make most of my money, I would say, in trading. So it depends on what cycle we're in and what cycle that Forex pair is. But if you were able to get in on like this, for example, you look at in beginning of 2018, when you have like this accumulation range, you start a good trend to the upside, and then distribution. It's so clear. It's so incredibly clear. And if you're able to spot this, and then you see that the overall trend is bearish, and you see accumulation range like this with a clear breakdown, the trends on the JPY pairs back in this time, beautiful. It's absolutely beautiful. But then something changed. You go back here, it definitely had a shift in structure around this time. In like 2021, we had a massive shift of structure. And now when you're looking at the AD-JPY pair, and actually most of the JPY pairs, you don't have that structure anymore. Okay, you have it's clearly a ranging environment, even on the lower time frames, and we had a very unclear market structure from all the way from March in 2022 till I'd say like March in 2024. So 2 years of these different structures. So asking me what the best pair is to trade is the wrong question. You should ask which pair is in the right in the right cycle to be trading as a swing trading trend following trader. And right now, I think that is not the JPY pairs anymore. It's more the USD pairs. And you can also look at the USD JPY, how during that period when AD JPY were kind of being destroyed, you had other JPY pairs kind of looking interesting, but you still have this overall structure. So right now, I would say, well, I'm really liking, of course, I'm really liking Euro USD, Euro GBP. Obviously, I'm liking Euro GBP because I'm in a position on this one. You know what? I have to double check that I'm in on the accounts. It's gonna be open up all the different MetaTraders. Okay, on one prop firm, I'm actually I'm actually in USD CHF. What is my entry on this one? Okay, so my entry on USD CHF here is 94.80. So I have an entry here on USD CHF. That's interesting because I'm definitely going to be building upon that position if we break below this level, because I do think that the USD weakness is going to come back in. Holy says, I started trading Euro NCD after I heard you talk about it a couple of months ago. Good results to date. Thanks for the heads up. You're very welcome. Euro NCD is a beautiful pair to trade if you're a technical trader. Any non-USD pairs would be more rational than for this cycle. Well, and Henry, I know you're in my communities. You know that we've talked about a few ideas, and if you look at GBP AUD, for example, this has been moving very bullishly, despite the whole thing with USD going on. So you got GBP AUD. Now we missed this, right? We did miss this. I did have this on my radar, but I wanted to get a pullback. But it's important to understand that the beauty of the Forex market is you'll have you do have choices. So right now with Trump, there's a lot of things going on with the USD pairs, obviously, but there are other pairs that does not have that high of a correlation to what is going on with Trump's tariffs, for example. So of course we can look at something like GBP NCD. Look at this trade, absolutely beautiful. Look at that trend line, and also add the reload zone here. So this is just perfect in so many ways, right? You have the third test of the trend line. Now remember, you need 2 data points to create a trend line, and the third retest is the same as the first retest of a horizontal level. So the third retest of a trend line is the first best test, just like with horizontals, right? And you could have even made some money here, like that bullish engulfing candle right up into the 0.618. That's quick, easy money. So we had a fib from that low to very high. What do we see? Perfect move inside the reload zone right here. Bullish engulfing candle, looking absolutely beautiful. And then straight up into the short reload zone there as well. Going to the 4-hour. Triple bottom, creates a range within on high time frame support. It's very good. Now, of course, I missed this one because I wanted to see a pullback. Instead of that, we had a gap up. Check out USD/JPY. I'm long on that one. Love to know. Yeah, okay, let's take a look. Let's take a look. So the idea that I have with Euro or USD/JPY was that I wanted to have. I have an idea because I look very yellow. What if we do this? Now I can't see anything because I've looked into the light. I look better now. Okay. Red it is. It looks like I've been like drinking red wine or something on my lips, but it's coffee. I trust me, it's definitely, this is coffee. I do look like I'm okay. 4-hour USD/JPY. Well, what I want to see on USD/JPY is, well, first of all, what I want you guys to do is I want you to hit the like, subscribe. It's such a small gesture from you, but it really means the world for us. And it also tells the YouTube algorithm that go check out this guy, check out this YouTube channel, check out the 5ers live trading room. The reason why I'm not interested in going long on USD/JPY is because I feel like there's such a good area below. This level right here is the perfect level for a retest. So I'm not really interested in entering a USD/JPY trade here. However, I mean, I think what we're seeing here is either could be seeing a range here, and then we have a retest of that range EQ. You know what? I feel like, you know, when you have the feeling, you open the chart and you look at price action, and you just want to get out of there. Like you just want to look at something else. Makes no sense. That's kind of the feeling that I'm having right now. By the way, look at this. Look at this. This is nightmare fuel right here. Look at that. Look at that gap. This is the entry, and this is where I got out. Wow. That's ridiculous. There's a gap right down to stop loss. Wow. Anyway. Yeah, okay, so I don't like USD/JPY. I honestly, I can't really help you. I feel like it's at resistance going on a 4-hour. Yeah, I don't know. I really do not know. Take a look at gold. Man, these lights are way too bright. I need to turn them down a little bit. Okay, wow, nice. Like I was going blind there for a second. That's, you know, life as a movie star. Okay, let's take a look at gold. I've been hearing a lot of things on gold. This is just nuts. I mean, what's going on here? Should I just open a gold long on gold with 10% risk and then just leave everything for a year? Come back and I quadrupled every account. And you know, the thing is, I'm saying that as a joke, you think, right? But every time I've opened up the gold chart, I've always been saying maybe I should just open a position and leave it, because this is rather bullish, isn't it? I mean, wow. I mean, this looks stronger than Bitcoin. Let's look at Bitcoin. Yeah, I mean, gold does not have these types of accumulation ranges. It's just, gold is insanely strong. You know what? Let's add Bitcoin to this. Okay, I take that back. It actually looks similar. Yeah, it looks very similar. It's basically the same. Basically the same thing. All right, that's gold. No, I'm not done with gold. Sorry. My gold analysis is basically just, this looks better than Bitcoin. Thank you for watching. Okay, so looking at the 1 hour, the 4 hour. This is the 4 hour. We have a level right here. We're going to be adding a line on the wick right here. Okay, that's a wick. That's a level. Go into the 1 hour. That's a retest. We have a range, low time frame range. What does this mean? What does this mean in terms of direction? Can we make anything out of this? This is a range. This is a range. I'm trying to understand the way gold, because it's all about patterns. Okay, it's all about patterns. We want to see if we can find a behavior. So basically, every chart is speaking to us, right? It has its own language, and that language is the behavior of the trend. Okay, so gold is telling us, for example, if the momentum of the bullish moves are being reduced, that tells us that you know, the gold is telling us something, and the bullish momentum is getting weaker and weaker. If we, for example, see that a behavior of gold is to always consolidate below resistance on the 15-minute before a breakout, and we see that fail and instead start moving down, that would be something bearish. So we want to see, like, can we, every market is telling you a story, because it's humans buying and selling. It's the principle of supply and demand in action, and it's telling us something. But what is it telling us? It's what it's telling. Compare gold with coffee. That's a good one. Coffee is like coffee and orange juice. Like when I envision myself having a gold bar in front of me, a cigar, a cup of coffee, and a glass of orange juice, and a ledger filled with Bitcoin. That, because look at this, like that's the trade. This right here is frozen, concentrated orange juice futures. Okay. Okay. So this is orange juice. We're trading the Forex exchange, like the foreign exchange currency market. We're professionals, right? We're looking at the macro, trying to figure out where's the next trade war. We're gonna be shorting this country against this country, and here we have frozen, concentrated orange juice futures pumping from the low to the high 500%. And we're looking at and we're trying to be professional. And this is coffee. This is coffee futures. From this low to that high, the 167%. We should have just bought orange juice. Like it outperformed Bitcoin. Orange juice outperformed the orange coin in a world where the orange man is calling shots. We live in a very interesting simulation, guys. It's a very interesting simulation. Our AI overlords definitely has a sense of humor. But yeah, going back to trying to distill the story that gold is trying to tell us. So we have higher highs and high lows. Do we have any change in behavior of the higher highs and the higher lows? That's what we're going to try to find out. The lower low here. That's get a lower low and lower high. But that's pretty much it. This is the only time when we had a possible change in behavior, but we did not really confirm it. We didn't break to the downsides. We continued higher. So I would assume that the move that we're seeing currently on gold is going to continue. That's on the 4 hour. Now we want to try to see. So we're currently we had a low. We had a move up. We took out the last. We took out the last local high, which would be sort of like a type of FTA, and we formed a range above that. Can we find any other scenarios where that happened? Took out the local high here, formed a range. We sort of broke out and consolidated here. And I'm trying to see, do we have any clear changes in behavior that we need to know about? So I'm a little bit cautious with the way this range is developing. And from a technical point of view, all I can do is just add a few horizontal levels and see what we get. That's a good low time frame level. It seems untested as well. And we're currently testing resistance. I would view this as the being the resistance that we're currently testing. So and we already had a rejection here. We can go into the 1 minute and we see that we already had consolidation, breakout, and then we hit that level right here. Do I think the 5ers is good even though the leverage is low? The leverage isn't low. How much leverage do you need? like how much are you risking per trade, and what's your stop loss like? So we have the high stakes program for people that want more higher leverage, but please understand that asking for more leverage is a lot of times you're asking for trouble, because if you need very high leverage to I mean, it depends on what you're trading. If you're scalping like the 1 minute and you're using extremely tight stop losses and you need to risk a lot per trade, then you need a higher leverage. But the high stakes program has enough leverage for everyone. So it looks like we have momentum to the upside, and I would say that every time this level has been retested, it has a sharp correction. One time here, and the other here. If you mostly trade gold and have a 50 pip stop loss, then I guess that wouldn't be a problem. That's quite tight, though, isn't it? On gold, I'm not really trading gold much. I can't really say much about that. But the high stakes program should definitely have the leverage you need. Anyway, looking at the behavior of gold every time it touches this level, is a strong rejection. Here's a rejection, and this time we're having a rejection, but we also consolidate above that first rejection. So I think we're going to break out here. I think we're going to break out. Now, where's the target if we do break out on the lower time frames? Well, I would be looking at this level, but that's just a very, very small move. Let's go back out to the 1 hour. What I would be looking at, my type of trade is this. I think this would be an interesting trade because I'm not a breakout trader. I want to see a pullback, right? Or a break and retest. So maybe a move up to this level, breakout, rejection, and then go long and a possible retest of that level right there. Or a move back down, hit the trend line, and perhaps maybe a wick down to the 0.618 and then start moving higher. That's the type of entry that I want to be taking as a break and retest trader, as I'm not a breakout trader. But that's the two ideas that I'm currently watching right now. Okay, so we have the breakout right now, looking at the 1 minute. Now let's go even lower. Let's take a look at the tick shot. So let's take a look at the one. Why can I? Oh, let's take a look at the 10-second chart. I know you're gonna be laughing, but it makes sense. So what we have here is a level right here. Now we could be looking at this as a break and we're looking at this as an opportunity to get in a break and retest as well. It's probably too late. So we want to make sure that if we add the fib here, we don't want the price to go too high so that the fib levels doesn't align. But the fib levels still align even if we go and test that high right there. How's my position doing on EURGBP? Well, it looks very bad. That's how it looks. Not very bad, but definitely not very good. Okay. I feel like I'm getting out of picture so frequently. I have to stay straight. Can I like zoom out? What if that helps? Oh, look at that. Nice. Do not forget we have Jolt's job opening news event in around 2 hours from now. Yeah, I'm not gonna be here when that happens, hopefully. We'll see. We have Victor coming in a bit later, taking over. I believe I'm gonna be here for about 30 minutes more or so, and then Victor is taking over. Okay, so now we have a retest of that level right there. So now if I would be trading this, let's go back to the 1 minute. Yep, it's retesting that level right there. Oh, that's a big gap down on the 1 minute. You see that? Long from 2, you are long from 289 and 2818. Good. It's a good good price. I'm not going to trade this. We're just going to be following along here. This would be interesting if it confirms. Let's see. No, I'm not going to take a position on this. Like, I'm just playing around. It's no... There's a difference between doing analysis and trading, and now I'm just doing analysis for the sake of doing analysis. But I would probably enter here. Look at the 1 minute. Where's the 1 minute at? Okay, so on the close of the if the 1 minute candle about 20. Yeah. I would enter right here. Put stops below those lows, and you can see how the structure is confirmed on the 10-second chart way before the 1 minute chart. Now you're looking at this and you're probably going to be laughing like the guy is trading the 10-second chart, but it makes a lot of sense if you think about it. It's just, this is just the flow of the market. This is we can even go back to, we can go to the 1 second. This is almost like looking at the tick chart, and here you see, you know, the flow of price action in real time. You can still use your 1 minute as confirmation, right? As we did here, the 1 minute candle closed here is a bullish engulfing candle, but you will look into 1 second, you will see changes much more clearer and cleaner. So here, for example, if we fail to get above that that resistance, then obviously, if you're in something like this, you would just want to close it. This is why I don't really like trading trading on the lower time frames, because there's just too many decisions that needs to be made, and I feel like I want to take like one major decision a day. Like, if that's good to me. But I would probably close this right here. It's not getting, we're not seeing that momentum that we want to see. Oh man, I need some coffee. You know how much a pump that I need to buy and install a new pump for my heating system? It's got $12,000. Who has $12,000 just to spend on something that you don't even see? Sucks. Yeah, you're laughing, but I'm crying inside. There's a lot of money, man. That's why I'm looking at gold on the 1 second chart.
How's that coffee, Jonatan? Is it
That's
a
looking good. Looking,
Nigerian? What was
this
it?
is
Nigerian coffee? Was it
it's
Indonesian coffee?
this is I have no idea what this coffee is. It's a bit. It's this is my cheap coffee. This is the coffee that I drink when I don't like when I need coffee. You know, when I need coffee, this is the coffee I drink. But when I want coffee, I drink Ethiopian coffee.
Oh, Ethiopian coffee. Nice.
Yeah, it's good.
Is
You know,
is
the
the
difference
Ethiopian
between
is the Ethiopian the expansive one with the droppings or
no,
or
that's
not?
that's uh what is it called? Coffee, nothing. Coffee. I don't know. The thing where the animal eats it and then the rest is history basically. Copy Lubak, that's the one.
Yeah. Okay. Nice. And how does it taste?
Never tasted it. Never tasted
Oh.
it.
Are you still having those monthly subscription where they send you a different type of coffee every so often?
Yeah, I do. Every once a month I get a premium grade specialty coffee, and it's pretty cool because I get the coffee and then I get like information about where the coffee comes from and everything. It's pretty cool. Pretty cool, man.
Nice.
But with this new
So
pumping installed, I probably have to cancel that subscription.
you mean the 20K pump?
Yeah.
I'm not laughing at you. I'm
Now you're not laughing with me
you.
either. All right, so what we're looking at, I'm looking at gold here, and talked about how, yeah, we're getting that breakout. It looks very, very strong. Looks, this looks very strong. The question is it just going to continue? You know, I feel like the momentum is definitely there. But you know, I'm just gonna be back in a couple of minutes, okay?
No problem at all. Let me put my screen on. Otherwise, it's going to be a little difficult for people watching and hearing me to follow what I'm explaining. Let me adjust the cam so you guys can see me a little bit better. Is that better? I think it is. Something like that. Sure. All right, let's see. Well, I was talking about this trade, not this elaborate, not this fully. I didn't put in the entry order blocks, but of course we are traders doing these streams, so I am trading in the background, even while I'm actually not talking. I'm looking at the market, looking for those opportunities, and we talked about it. This is in the GU. Sure, we can. I can surely look at gold, for sure. I'll put a note. I'll write it down as a note to take a look at it. We have news coming in, right? In a little less than 2 hours. The news is the JOLT opening, which is, you know, an indication of how the job market, the labor market is doing in the US, meaning it's quite important. You know, it can give you an idea of how NFP, it's not the same metric, it's a different agency and a different metric that they're looking at how the labor market is, but it can give you a little preview into the labor market in the US. That, by being so, it is significant, right? We know how significant NFP can be for the market, the economy overall. So JOLTS, you know, being, as I said, it can move the market sometimes. Now, we got that news coming out, but we still are, well, basically we're in a range, in a quite broad range. The GU has, let me see. GU has right now has 75 pips move today, while the average today would be around 105. Now, we also have, if we're talking about GU, we also have on Thursday the interest rate decision of the Bank of England coming out. That's 2 days from now. A little bit too early to start that compression. Usually before big news, you see a compression and then the expansion at or during the news coming out. So 2 days earlier is a bit too much, but tomorrow on Wednesday we have the ADP, which also gives you an idea how the labor market is doing. So we do have, this week is kind of laden on with high impact news. I wouldn't expect 2 days earlier for GU to be compressing already. So I would my expectation, right? That's the working assumption that today we're still in a good chance of reaching ATR, roughly 100% ATR. So if I see that, I ask myself, okay, we have I mentioned this, we have an area here where we could be looking for a short, and we have an area we could be looking for a long. Well, the long one triggered, as I showed on the lower time frames, came nicely into that area and moved away very, very nicely. Textbook quasi entry model, as we would call that. Right? But the question that I ask is, okay, so if today is let's assume for a little bit that we're going to have the next leg is up, right? So this is not a retrace, but actually a continuation of the move that started that was during Asian session, right? So imagine we have a push like this. This is the retrace and the continuation. If that is the case, then what can stop price, and considering what the ATR, what can stop price for us to look for a good target? Of course, you can see that we have multiples of structures that could stop price. We have the daily order block. I already mentioned that daily order block has already been used. It has made its move. So I wouldn't expect price to react too much from it. Maybe an initial reaction, but maybe not even that. It's probably just going to pierce it deeper into that order block, likely may or may not, this invalidated. But I don't expect much of that reaction of the lower border of that order block on the daily time frame. We do have an H1, right? But that H1 is it's part of a quasi. I'm sure you can. Is it? It isn't part of a quasi. It isn't, but it is part of a. Let me see if it's part of a quasi on the higher time frames, because I do have it marked as a quasi. Yes, it is part of a quasi, but that's the bigger one, much bigger quasi. While this is the left shoulder, the neckline, the top, and the break of that neckline, we're coming back into a H1 order block, which is part of this quasi, which is also the quasi on the H4 for my reason to be looking for a short as well. So we have this structure as a possible area we could be taking the take profit, putting the take profit. That's one thing. We also have the fact that the previous high, which is from yesterday night, which is a great area to be targeting as a liquidity area. Right, there you go. That could be a nice target for our trade if it continues our way, of course. And then we have the ATR. The ATR tells me, as I said, 105% from today's low. That means that we're going to drag this from the lowest point of today, right, to 105. That gives me a much higher number, which is not completely, well, likely if you consider that we're getting near to those high impact news, right? We have the jolts. Well, the jolts can move the price, of course, in once the news comes out, but in the wake of the numbers, the interest rate decision on Thursday, NFP on Friday, and tomorrow ADP, I wouldn't expect for price to, start shooting right away, right? They want to see the news coming out first, then make the move. So I wouldn't expect price to go all the way to 105 today, although in terms of ATR, I would expect so. I don't think the compression would start that earlier, and 2 days, 3 days before the news. So as you can see, I'm in dubio. I'm in not sure. Should I be extending my TP or should I not be extending it? And when you are in such a situation where it's not sure, you have conflicting indications, the best thing to do is to take the conservative choice, right? So the conservative is not aiming for those higher. Let me mark the. I didn't mark it when I measured the ATR, 100 ATR. I didn't mark it. It's around 105, so that's 24.85, roughly, give or take 24.85. All right, let's mark that as a possible area of TP. So now there you go. We have the Asian high, or the yesterday's high. We have the ATR of today, giving us 105, and we have the structures that we have multiple structures. The daily, which is not convincing to me, that's going to be much of a resistance for price, and we have the H1 order block, which is within an H4 entry order block on the Quasi, which could start see price react to. That H1 order block has already been mitigated, right? I don't see if anyone in the and Enrique is asking, where's Alex?
Alex will be here tomorrow. Alex
Tomorrow,
is going to do this time. He's going to be here tomorrow.
We did have already a mitigation of that order block, meaning that it's more plausible that we might see a deeper piercing of that order block, right? Because the first one is the stronger reaction we can expect. So the second one, you can expect it to hold, have a more price, having a more less of a difficult time interacting with this supply, so meaning it can go deeper. So with that said, I would say from all of these levels, the ATR, the yesterday's high, and the lower border of the H1 order block, the most conservative is, of course, the lower border of the H1 order block. And that could be a good idea where we could put our TP. For those who got in, I mean, those who trade or already in the trade, of course, you need to have your own logic for your TP placement and not rely on myself or someone else, some external factor. You should have your trade plan decided. But if I were in a trade, and I am, I would put my targets in there between those two choices. So let me indicate that. I see in the chat, Enrique wants some action, some adventures on the M1. He wants some entertaining.
You gotta trade the 1 minute, man.
Let's look
they want action, but do we need it? Do they need the action? Maybe
That's
not. Probably not.
The thing is, not everything we want, we need. There's a great distinction. This is completely off topic, but when you're, wanting, I know it's it doesn't help the adventure request, but when you're for a healthy budgeting habit, that is the question that you need to ask yourself: do I want it or do I need it? And a lot of the times we want to buy things we don't need, and you ask that question, and it's going to do wonders for your budget.
Yeah. No, it's interesting that you bring that up. I saw something saw the documentary a while back about the level of consumerism that we have in today's world is just absolutely, it's nuts. It's absolutely crazy. The amount of products that are being produced on a yearly basis like the number of things that we produce on a yearly basis as a civilization is just mind-blowing. Like, we don't need that much stuff. Like, we really do not need that much stuff. And we're all a victim to it. Like, we go into store, like, for example, I some days I take the kids to the store and like I tell them, like, we're gonna buy this thing. This is the thing that we're gonna be buying. It's one thing, and we're gonna be buying that one thing only. I leave the store with like 20 different things. It's like I go into the store with the idea of buying one thing. I leave the store, I'm like, what happened? What happened with buying one thing? It's like we're more or less we're all victim to that idea. And I kind of view the markets in the same way. It's like the market is exactly, then you're broke. Yeah, I kind of like view the markets in the same way. You enter the marketplace like you enter a supermarket, and there's just flashing signs all over the place, like, oh, the S&P 500 is on a discount, it's down 50%. Actually, that's probably a good time to buy, though, to be fair.
50%.
But there are I think that there are no discounted prices in the markets. It's just prices. It's just, I don't know where I'm going with this, though. I'm very tired. I need coffee. I think it made some type of sense, maybe.
No, it does make a lot of sense. I mean, in terms of consumerism, it's the question, not the question. It's the how do we value, how do we, what are the factors in our decision making before we purchase anything? Is it just price? Because if it is only price, then we will continue to stimulate consumerism, right? Because that price goes down, we buy whether we want it, whether we need it, whether it's a good product for ourselves. We don't care because the price is good, we want to have it. It's like women with shoes, right? They can never have enough. So it's...
You're saying men don't buy shoes?
Well, typically, I mean, let's not generalize. I'm sure there are a lot of men who enjoy buying shoes, and they should keep doing it if that's what they like to do. But I mean, typically, I mean, I've never had a female person that I ask, do you have enough shoes? They never say, yes, I have enough. They always are ready to buy more.
Victor, you're such a player. You're such a player. All your female friends, like all the women throughout all the years.
I didn't want to say
shoes. So many shoes out there.
I get what you're saying, definitely.
But it's nice to know that you do have female friends. I have one. I don't have any female friends. I have like the closest I have to female friend is like you or USD. I would say. But like that's the closest.
Henry is in disbelief that I have female friends.
Well, we can generalize. There are this. You know what? I think the best course of action right now would be to leave the subject and kind of like continue with what we talked about yesterday, and hope that the internet forgets, and at least this time.
No problem. we're getting in a landmine. Let's steer away.
Exactly. We're very close to the stop loss right now.
Yep.
Manage that risk.
Actually, yeah, I'm not gonna continue. I'm not gonna do any follow-up comments. Not at all. I'm gonna stick to the charts, do my thing. Oh yes. So I was talking earlier that the GU has a buy setup as well as a reason, a valid reason to go short, and I want to elaborate on both of them. Why I think of that, why I think so. Well, and the reason is, and we've seen this, we see this oftentimes when there's big news coming on, the range they compress, and as they compress, it creates, each time it goes to one extreme, it creates order blocks or other structures that keep on, squeezing the range closer and closer to a smaller range, and we kind of see this happening as well. What we see is this: we have on the D1. We have a fresh order block that was created yesterday. Yeah, so that's buying pressure supposedly in this area, and we just retested that wick that it hasn't been printed yet. It is showing that wick is indicative of that buying pressure coming back to the, presumably coming back to the market, right? So that's one thing. But above that, we also have a still fresh order block. It has been used already. It has had its impulse already, but still it's there, it's valid. Not only that, we are seeing by the looks of the wicks so far, it is exerting its power, right? It is making lower highs, meaning so far it's doing its job. That is this fresh order block right there, and both of them are very nearby, and that is the basis. I know it's not a lot, only 22 pips in between, but if you go to the H4, you have a similar thing happening. You have the quasi on the H4 telling us that this could be a reversal pattern, right? That's the neckline, that's the head, breaking of the neckline. And where do we go to? We have one big order block here that could potentially price much lower, right? So that's the sell setup, having daily and H4. And of course, if you go to the H1, H2, you will find structures to build your case. At least I have. And that is this area here, which we did tap into earlier yesterday, and we might tap into it today again. So that could be a sell signal. Maybe we get we already have a buy signal. Maybe we have a sell signal later on today. Who knows? Will depend on the news, how the market will digest it. That's the sell signal, or that's the sell setup. And if we go to the daily, let's back this a little bit here. Let's go the daily order block, fresh order block that we have here on the H4. We don't have any quasis where this is the head. Presumably there is an order block there, but that's not where current price is right now. What we do have is a fresh order block that was created just 2 bars away, right? And that's what we're testing right now. So we have the daily, we do have the H4, we have alignment in macro and intraday. And if we go to the H2 and H1, you can see that I have already marked these 2 lines, indicating that that's the area where presumably or potentially we could see some buyer pressure coming in. That's the setup, that's the buy setup. So we have a sell setup above, hasn't been retested, hasn't been reached yet, and we have a buy setup, which we already, by the entry that I just showed you guys, we did have. Where did that happen? That's exactly where the entry order block was on the Quasi, on the 5 minute. That is, it's also on the 3 minutes, to be fair. So there's actually 2 areas right there to be had. Let me check a little bit, because while I'm doing this, I see there is an opportunity for perhaps a trade. While we do this live, there is a. All right, so this will be the entry on the 3 minute, and the entry on the 3 minute, the second entry, not that tool, but this one. And you can see how the market reacts to them. I know it looks like I'm putting it after the fact, but it doesn't depend on what happens here. It's all in this leg of the market. So it is possible to identify them beforehand. You see that overlap in the 5 and the 3 minute, right? It's not a coincidence that price has a little retrace there. It's all in the market. Price action is, when you get a hold of it, you listen with a objective way, listen to the market, the price action, it starts talking to you. All right, so I'm going to
Can I just jump in and ask you if it's okay, the 3 minute? I think a lot of people are wondering why the 3 minute, because most people, they look at the 1 minute and the 5 minute, but you have a time frame in between.
Yes, the 3 minute, there isn't any magical reason why the 3-minute could be used. It's just one time frame that is, in between. It doesn't really matter because the you could theoretically you could see what I'm trying to identify in the market is the shifts, right? The engulfings and the outside bars are basically shifts. One side handing over control to the other side. And I measure that by the bodies which engulf each other and ranges in the case of outside bars, right? Now, those things, it doesn't matter. The only thing you need to measure to be able to know which one to control is have equal periods on each side, meaning it doesn't matter if it's 1 minute, one bar, which is 1 minute, and the other one is 1 minute, or if it's 2 minutes, 3 minutes, 4 minutes, it doesn't matter. As long as you have equal amount of time on each side. So it could be 3 minutes, it could be 3.5, it doesn't matter, as long as it's equal time. Because what you want to measure is in the same amount of time, did price move, right? Is the volume on one side, the interest, the pressure on one side exceeding the previous equal amount of period? And the exact amount isn't important. Hopefully that isn't confusing people in the chat. If it does,
I think that's I do think that's clear.
Well, if I were to say this, maybe I can show it in the charts, right? Like this.
Wait. Can we just before you went on, we looked at gold. Can you switch over to gold? Just look at that quickly.
On the 1 minute, want some adventure, some excitement?
Yeah, we can look at the 5 minutes as well. But look at what's happening right now.
Ooh.
It is
Wow,
when you came in, we were
indeed,
trading at like 2.823 or something. So this is yeah, lots have happened in this short amount of time. This is quite a big move. It just keeps on going.
But in terms of ATR, it still has a lot more to go.
Yeah, that's even more crazy.
Yep. It is breaking out all-time high. Gold doing its thing, but if the ATR for gold, depending on, of course, what value you use, but the ATR is currently at $33.84, and we've done only $26.59, meaning
right.
or not, dollar on the on the instrument. So we can still do about, what is it, $7 on basically we can even mark that. This is 100 ATR from here and another $7 up, which takes us to roughly around 28.41. That's based on the ATR.
Yeah, Victor, I gotta go. So I'll be leaving you here, and I'll be back tomorrow with Anastasia.
Okay. And yes. Thank you.
I'll be watching in the background when I'm trying to work on my heating system. See if I can get some heat in the house. I'll see you guys. See you guys tomorrow.
See you tomorrow, Jonatan. Thank you for everything you do for our community.
Thank you, Victor. Take care.
Bye-bye. There we go. All right. So yes, Hammond correctly indicated that the ATR is 28.45, and that would be even a little bit higher, right? It fluctuates depending on your exact value or settings that you have on the ATR. If you have it more considering the nearer, the more recent values, then of course it's going to have a bigger number than if you have it on a maybe on the 20, the setting on the 20 or maybe the 15 in compared to, let's say, 10 or 5, which of course is a little bit different, but it gives you roughly the idea where what you can expect today. If today is going to be a similar day as the past few days, and that's the key here. Is it a similar day as the past few days? I would say yes, because the volatility we've seen from Trump coming in, doing those tariff talks, those not necessarily bluffing, but those negotiating choreography, if I would call them that, that it has been going for some quite a number of days already. So I think yesterday, Friday, it is already. Hamid says he uses ATR 14, which is the default setting, which is good. It's always good to, if you don't have any specific reason to use any other setting, just use the default one, 14. I tend to use something close to 14 as well. If I want to, 14 is definitely in the ranges of what I use as well. But coming back to what I was saying, that gold, not only gold, if you compare ATR, we have been having some volatility already for some days already. So the ATR already has caught up, I should say, with reality, because ATR, because it's measuring the last 14 days, 10 days, last 20 days, there is a delay. It is lagging in its representation of volatility, because that's what it is, but it is lagging. As long as you understand that there is a lag, and at those times you should not be using something at 20. Let's say something happened, let's say last week the market was calm, but starting yesterday or the day before yesterday it exploded, right? If ATR isn't a great indicator in that case, because it's calculating on averages where price hasn't been very volatile for the most part, and only 2 or 3 days those extended ranges. So if you understand how it's calculated, it's a good thing to, in those cases, for example, not use a number 14, 15, or 20, but maybe a number 5, right? The settings of 5, only looking at the last 5 days or 4 days even. So you have a more recent gauge of that 100, that average range, which is what you want to be looking at when you look at ATR. Hamid wants to look at the equity. Do we have more people in the audience who want to have other requests for other assets that we could look at? We have an hour and a half for our stream today, and make use of me, I would say. Request whatever instrument you want us to look at and do some analysis perhaps. I could as well explain into a little bit more detail concepts that I used all day. I talk about them all the time, but this is the time where you can ask anything, but specifically things that go a little bit deeper, because we have an hour and a half where we can dive deep into any subject we would like to. And if in the background I'm looking at that euro dollar, right? We had the move. Let me mark that. It's on the 5. Somehow no, it's on the GU. That's the reason. I was asking myself, why isn't my setup right there? Of course, it's not EU. It's GU. Riyadh asking, I need a part of your analysis, Victor. Okay, which part do you need of my analysis? Just let me know, and I'll help you. I'll do my best to do that. Satisfying Short says, that is more of a support question, and we don't give support on the live stream. It's we don't have the tools to give you proper support here. The adequate place to go to is the website on the live agents, or on Discord. There's also a support section, and you can also always email the 5ers and find support email on the website. They're more equipped to help you with support, account activation issues and the like. Joshua asks, am I long EU? Yes, I am. I'm long EU from this. This order block is the reason, right? I'm long from that swing low, because that's the picture perfect quasi that I typically take, and I talk about it all day, all week, all the time. It's not necessarily exactly that, but this is the general idea of the quasi, it coming back and then pushing presumably to this high and maybe some higher targets depending on the news that's coming out in about 85 minutes, 84 minutes from now. Yes, so I am long, but I'm also looking for a short on this area. And I'll tell you guys in a little bit why I'm also looking for the short. I know it sounds counterintuitive to be going long and short at the same time. You ask yourself, well, in that case, you don't know what you're doing. You don't know which side the market is going. And the reality is, we don't know what direction the price is going, right? You only have an idea of the probabilities of something happening in the market, right? Whoever thinks and says they know where the market is going is doesn't understand it yet, because the market is, in the end, there's no 100% certainty where the market is going to go. Right? It's all probabilities. Of course, we have our biases. Of course, we can identify high probability setups, but even in those setups, it's not going to go there all the time, consistently. It just has a higher probability of going there, right? So let's see. We have Haresh. That's indeed my second name is Quasi. It's Victor Quasi. Yes, you guessed it right. Let's see. Riyadh asking about my Instagram account, because I've done a lot of research about you, but I couldn't find any link except here. Yes, that is true. I think your research was correct. Is correct. I don't have an Instagram account. I don't share lifestyle or anything in that matter. I am maybe perhaps you can get an impression already. The fact that I have a mask, I'm kind of private. So I'm maybe I will someday have an Instagram account, but I'm a kind of private kind of person. But I do love trading, and this is with the mask. That's my solution in combining those two passions. Right? I love trading, and I enjoy sharing my passion with other people. But I'm also a very private person. So there you go. That's the reason. Yesterday was someone who asked me if it has any psychological reason, right? The trading psychology for a reason using a mask. And I was thinking very hard and never thought about it. Never had anyone ask me that before, but I don't think so. It never crossed my mind. I'm not doing it for the psychology, the trading psychology at all. It's just it makes it possible for me to combine those two or not passion, but passions for trading, and my preference for living a private life. All right. Yes, I appreciate the gesture or the sign. I may have perhaps one day in the future I will start an Instagram and start sharing some other stuff through that medium. But I haven't yet. I don't have any active accounts sharing. So maybe be pending. Maybe one day soon I will do so. All right, let's look at the US 30. I think that was the next one in line to be analyzed. Of course, we have also US 100, which is Nasdaq, of course. US 30 being the Dow Jones. We'll look at the CFDs of those. All right, let's look. I would say a very important thing to have an idea of the Dixie if you're trading GU or EU. Yes, the question is, it is important. However, you don't really need a Dixie to trade GU or EU, because everything, well, that's debatable, but most of the time everything you need is already in the chart that you're looking at. If you're trading GU, you are already seeing the buying pressure of and the selling pressure, right? The price action of GU against dollar. So you see both of them already in the chart. There isn't anything that the Dixie will show you necessarily that GU dollar will not show you. Um, there are, of course, moments where you have dollar strength and you won't be able to see it on GU because of both of them are strong, right? And those times, yes, the Dixie can help you find, is it the dollar and the pound making its move, or is it none of them? But normally the chart already is enough. However, if you do want to have like a second opinion, the Dixie is a great place to go because it's a basket of different pairs against the dollar, mainly the euro. But also it gives you an idea of what the strength of the dollar is, and that can give you, ideally, what you want to see is you want to be looking at other pound pairs, right? And other dollar pairs. Other dollar pairs you can look at just different pairs or the Dixie, and other pound pairs, and you get the idea which pair has the upper hand. Sometimes it doesn't show on the pound dollar, but I would argue that everything you need is already in the chart. Very rarely you can see something on the Dixie that's not going to be visible on the dollar, on the pound dollar. Very rarely. It doesn't happen that often. So you got to ask yourself, is it necessary to add another step in your analysis if it's most of the time just telling you the same story? Yes, exactly. That's exactly the thing. It should give you either the same signal or no, not giving it at all. And it just makes it a little bit more difficult, I think, if you're using two factors to decide whether you want to be long or short, instead of just using one, which is the chart that you're going to be using, looking at the price action and just following that. You don't need necessarily multiple pairs, because that's going to confuse and make it a little bit more complex. But let's look at the US 30, which is, let's see which one we're going to be choosing. Let's do this one. Yeah, I think this one is fine. All right, let's start on the daily, and we'll do a top-down analysis. Of course, we can do a quick idea from where we are in terms of panoramic views on the weekly time frame. I'll do it very quickly because we want to go deep into what we see. We don't have anything else. That's the only thing. Let me see. The monthly does have anything. Well, actually, that's a very nice monthly order block. Look at that. We came right into it and bounced off of it, right? When you see this on the higher time frames, I mean, isn't it easy where, easiest may not be the right word, but isn't it kind of simple how you just wait for price to come into those order blocks and take that long, regardless of how you feel when price was getting there, you probably felt, it was going to fall from the sky, but you just not follow your feelings and just follow a trade plan. It makes things so much easier. All right, let's go to the daily. So we have demand area that have been created below us. There is a quasi here. Well, actually there is. And it does look kind of a reversal pattern. This is the daily, of course, and it's a reversal pattern that is on its last legs. See how that entry order block on the daily indicated where you could have taken the short, putting it up above it, and shorting it to the next relevant structure. All right, we do have a bullish structure here. Hasn't been retested yet, that order block. It's not an entry, just a regular. This is a good question. This is definitely a good question. Thank you for that. Forex Revolution. Oh, we have Dirk with us. Nice. Yes, I was too. I was expecting it to take some time before closing that gap, but that opens the door to perhaps a bigger move, because the quickness, the swiftness that it closed the gap, right? That's a bullish sign, right? It was able to close it very quickly, in less than 24 hours, meaning, because for the gap to be created, you need a lot of bearish over the weekend, a lot of bearish pressure, and that to be reversed, that's a good sign for bulls, EU bulls. So I'm interested to seeing if we can get follow through from that move. All right, so on the daily time frame, we have a entry order block that was that did signal us a sell, did give us a sell signal. Remember, we're coming from a this is equity, so you got to watch out when you have bearish reversal patterns on the equities, because you have that natural tendency, that upwards drift, that's selection bias or survival bias of the index. So you got to watch that out a little bit, because obviously because you have an upwards trend on equities historically, the bearish reversal patterns, they are less successful as bullish one, obviously, because price keeps on going higher. So you gotta be careful and not extend your TP too much. But this one it did give us a sell signal, and the areas to be targeting on this trade is, of course, the low of that structure. That will be the first one. And if we have anything bigger, any order blocks, we don't have currently any weekly order blocks being formed, but if we were to have one, we could be looking for a longer target. We don't have that. Actually, I don't think it will even reach that low based on the higher time frame, the price action we see on the higher time frame. So we'll have to see. But I would, to be honest, because the market is so bullish, I don't want to be a hero in thinking it's going to go all the way down. I would just put my order block either at my TP before that order block, or perhaps that 50% retracement, which also coincides with the same order block, with an order block that is actually a little bit lower. But if you have two order blocks and the price can bounce from each one of them, I prefer to have the more conservative placement and have it before that demand zone. So but this already, it already happened. This is the daily time frame. Let me go to the lower time frames. We see if we can get a reverse from there as well. There is a quasi, according to Harshvart Singh, quasi on the DAX on the 50-minute. We can take a look at that as well. All right, so this is the H4 quasi. Right, you can see it did take out that line. You would say this taking out of liquidity, and that's true. But because we have price action from the left, I would consider that it's a little ambiguous, because the reaction that we got from the taking that neckline, it does look like liquidity grab for a continuation higher, maybe much higher. However, the quasi doesn't discriminate, right? Even if there's a liquidity grab on the neckline, the quasi is still standing, still valid, and actually it was already this is the quasi on the 50-minute, I'm sorry, on the 4-hour, giving us this entry order block. We don't have anything else. So if it gets there, that would be the area that I'll go down to the lower time frames and look for entries, maybe in the 5, in the 1. it doesn't have to get there. It doesn't get there all the time. But if and when, that's where I would be entering. I would be looking for. I know it is at the extreme, but that's exactly the idea. The idea is to, not get in the chop, as Dr. Diane would call it, in between two areas, right? Get to those extremes, because a lot of the times that's what the market is aiming anyways for. The logic of gold going higher, Diran is asking. Well, combining liquidity, good stuff. I don't use liquidity in the sense of, this structure or OB has to have liquidity, be combined with liquidity for it to work. I don't use that. You could, but I try to keep things as simple as possible. You actually, once you review and look at what I do, it's fairly simple. I do use it in different time frame, and that makes it a little bit difficult sometimes it gets different layers, but it's the same building block of the same of the setup. Going back to what Diran was asking, the idea behind, or the logic, it's not a logic, it's just that the market is predominantly on the higher time frame is bullish. You can see that it's going like a rocket. It's going up continuously, making higher highs, higher lows, on the higher time frames and on the lower time frames as well. That's the logic. There's nothing special about it other than that. It's market structure, and there was on the lower time frame, there was here a reversal pattern, right? That because we had the weekly order block being retested, this happened before, right? You can expect, this is the move down that created the order block. Let me mark it here. It was this movement first going down on one bar and the other one going up. That's what created the order block. And then after that movement, we had a retest of the order block and it moves away. Now that is the basis, to me, recent basis, and that aligns with the market structure, overall market structure of gold, where it has been very bullish, a lot of strength all the time, shallow retraces, and just keeps going and going up. If you're asking about the fundamental logic of gold going up, of course it's uncertainty, the risk of a lot of risk in the market, tariffs, Trump, uncertainty, how geopolitical, US will be not dealing or interacting with its partners, China trade war on the horizon, and things like that. And I think that's enough reason for gold to go up on the fundamental side. But so that's on the weekly, okay? And if we go lower time frames, we mentioned this, that we had a H4. Actually, we didn't mention this, but we can see market structure as well being very bullish, right? The legs up are making higher highs and higher lows, and it doesn't take a rocket scientist to see that this is going higher, making higher highs, breaking all-time highs, and a lot of momentum on the lower time frame. That's what Jonatan was talking about. All right, so let's see. Someone asking about the payout percentage on payouts on the 5ers. I mean, well, it depends on the where you are in which program, and I invite you to look that up, because we have different ones. The bootcamp starts at 50% and it goes up all the way to 80, 100%. And high stakes account starts at 80%. So it depends on which program you are on, what your payout will be. But it'll start at 50 for bootcamp and 80 for high stakes account, 50 for high growth as well. All right, let's see. What else do we have? Going back to, did we finish on US 30, I think we did. Let me double check that. I think I used the, not sure which one I used. I think it was the other one. That looks to be a different one. It doesn't matter. But I think we did. Here it is. That's the one we used. Yes. So we went to the lower time frames. We did close that gap we had on Monday. And we had we had the Quasi, of course. So I think it's another price feed, but that's okay. Let's go look at the US 100 or the Nasdaq. Which is very interesting with all those news we had on IA, AI, I mean, on last week. All right, so let's look at the higher time frames. What can we see? What can we identify? Basically, what I do with the order box is supply and demand. It's the same concept, just that I use the order blocks to identify them. But it's the same principle, the same application as you would with regular supply and demand zones. That is on the monthly. So we only have one demand zone below us. On the weekly, we have multiple bearish order blocks being created and retested successfully. So there is a little bit of a selling pressure coming to the market, right? Which is not unusual, considering the market will at some point start forming some will end, the push up will end at some point, and when it ends, when it decelerates automatically, it will have chances to create those structures. But what you can see is that it doesn't need, right? This is the narrative of the market. The market, as it was moving up on the weekly time frame, it created and left order blocks that are used as stepping stones for price to continue to go higher. Normally, price comes back into them as it moves higher, right? It mitigates them, as we say. However, price is so far still quite bullish, I would say, because it hasn't reached that structure yet, and yet, in spite of haven't reached that structure, needing that structure, it is already making bullish structures again. You can see it here, right? It created again. We're currently retesting it, right? The fact that it is creating bullish structures above the weekly one below without needing it, that speaks of strength. That's on the weekly. Let's look on the daily. What do we see? There is a Quasi right there. Can you guys see that? Who in the chat can tell me where the Quasi, where the entry order block would be? I'm not going to say talk specifically about ICT or his techniques, but yes, I think it's the same. It's exactly the same, a little bit different, another name, not another application, but another approach, but it's basically the same. Actually, we see that when you're trading long enough, you see all kind of terms coming, going out of favor, coming into favor, becoming popular, but the concept behind them are fairly the same, just repackaged, renamed with a different flavor, but it's basically the same kind of ingredients, slightly different perhaps. So can someone in the chat tell me if there is a quasi here, and where would that be? What do they see? What do you guys see? Two quasis. Hi. Cool. Nice. I like that. Which one? Tell me. There is a breakup structure to the upside. Indeed. Harish. Very good of you, Harish. Yes. Tell me, if you can, tell me, did we reach that entry order block on that break of structure, right? We first break the structure, the neckline, and when we come back to a area of demand, because this is a bullish structure, of course, a bullish reversal. Did we come back to some structure on the 13? Exactly right. That is the entry order block. You guys have nailed it. Yes, that's the entry order block. This is a pair. This is an instrument I don't trade, but it doesn't matter. Price action is the same. Technical analysis doesn't change, dependent on, it's not dependent on the instrument. It's universal. There are variation, there are nuances between one pair and the other, or between commodities and Forex pairs. There are some nuances, but the information, or the signs, the way the market talks to us stays the same. It is the same, right? The quasis, the reversal pattern, it doesn't matter if it's orange juice frozen or if it's coffee from Ethiopia. It's all the same. It's the market dynamics of sellers and buyers interacting with each other as price gets to different levels, and the psychology behind it. And that's something that is present in all assets being traded. That's why I love it. All right, so we have the quasi. You can see, rightfully so, we have the moves in the market, right? You can take this as the established downtrend, or you can look from the other way around and say, okay, this is the neckline, right? It doesn't matter which neckline you use. Both of them were broken, meaning we do have a quasi. That was the other one. We do have the quasi, and we had two order blocks, and I will call them entry order blocks, to indicate where price could potentially react from. And it went through the first one, didn't have a lot of reaction until it got to the second one. Actually, the order block is here. So and we can, that's when it gets to those structures, you need to wait for, this is the daily, so we need to change the color a little bit. That's the entry order block on the daily. There we go. All right, so those are the areas where you could be waiting, right? You could be waiting for price to come back to them, and that's where you want to be taking your entries, right? It doesn't matter what time frame you are, you just patiently wait for them. And it would have worked very, very nicely. If you go to the H4, you might see the same kind of quasi. Let's see if we have the same one. Since this is equity, you may want to check with other structures as well, or other price feeds, to see if you are, missing some information. But that would be one of the order blocks on the 4 hour, and you can see how it comes into that area, unable to close below it, and then turns around from it. I find that to be just a beauty of a thing. Wouldn't you agree? All right, so this is the 15. Let me see if there was an area, a way to trade this. It would have been quite difficult. You wouldn't be able to take a quasi from it, or maybe you would. Look at this. This is the 5 minute. There we go, and voila, what do we see there? That's one. We expanded 1, 2, that's the area. This is the entry order block on the 15 minute. And we have another one here, and it doesn't reach it before going away. So you would have missed that trade. I don't trade that one. It did use this order block, but I choose not to trade that. That would have been a very nice entry, but I don't trade that. As I said, that's a choice I make not to trade it. I wanted to go beyond the 50% retracement, but I mean, it's up to you how sensitive you want to have your system be, and it didn't come back. Yeah, didn't come back. All right. So I wouldn't have had an entry there. But as you can see, you can use this system and change it to your preference, so that it signals less or more often. But that is the area of interest to me. What I would like to see, though, something I didn't like as much, what I want to see is this. And this may be important for those who are watching this, Hamid and others who trade this instrument. What we want to see is when price comes into that area, we want to see a shift in the market, because supposedly we are expecting this, right? We're expecting for price to come. Let me get this out. We're expecting price to come breaking the structure, coming back to the area, and then presumably starting and continuing the trend higher, and who knows, much higher perhaps. But in order for that to happen, we need a shift to happen in that right shoulder, right? This would be the left shoulder, right? That will be the left shoulder. This will be the head, and the third one would be the right shoulder. So in the right shoulder, as it is forming that right shoulder, I want to see a shift in market structure, a shift in the order flow. And do we see that on the daily? I'm not fully convinced we do. Right? We see a big wick here rejecting this order block. Right? That's not what we want to see if price is going to go much, much higher. So today it has touched that order block for the second time, and I kind of like today's candle, but in order for me to completely, I want this to close above yesterday's open, so I can actually tell you guys where I'm gonna become bullish on. I'm already bullish on this because it's a bullish reversal with with an entry signal. It comes back into that order block, but I want to see price to close today above this level, that level, which is 2144.0.2. If it's able to close above that today, then I would say that would be a signal for me to either be long or look for a long. And I'll target the highs of this structure to begin with. Right? How you want to phrase that trade is up to you. But I would be doing something like that. Let's see. And target that high, and possibly going much higher if we see something on some time frames. It could be, actually there is a weekly target as well, which could be a very nice one actually. Let's see, we have 859, so that would make the 1720. So I project the target 1720, right? That's what I said. So 23,250. All right, that's my projection based on the weekly time frame. That's my macro target. And I don't know why that macro target went away, because it's supposed to stick there specifically for the macro target. There we go. That's the macro target. But I'm going to change the visibility so it's visible on the higher time frames. There we go. Right. So if we have a move, and especially if we close above this weekly close, weekly open, right? We can't see that on the, let me change this. I think it's already on the weekly, right? If it closes this week above this line, then I can, this target becomes valid, right? So it's not valid yet, that projection, that macro target, only if it closed this week above that weekly open of last week. I hope you guys understood that. If not, just let me know in the chat and I will talk about it. We have someone asking about the MT5, the 5ers account, not being able to open it in their trading platform. I don't know if you have checked already with the support channel, but we have had some issues last couple of days, and the passwords of, I'm not sure everyone, I think everyone has been reset. As you noticed, we send out an email for everyone to update, to extract. So the passwords have been reset, and you can go into your dashboard, get your new password, password, and then to update it in your trading platform. If you haven't done so, please do. And if you're still unable to get into the account, then check the live agents. They're ready to help you out because that's why they are there. No, I'm not Paladin. I don't know that person, but I'm not Paladin. I'm not. All right, let's see. What else do we have here? Do we have any request for new analysis? I hope everyone who was watching, who was expecting for Nasdaq analysis is satisfied with my views. I mean, they're just views in the end. It's not that I know the future. It's just what market is telling us by the structures it creates as it is doing its thing. And all right, let's look at this. Spirit, Bo or Boy is saying, yeah, I think it's much easier nowadays to, we have at our disposal, the trader, the beginner trader has at his or her disposal so much information nowadays compared to only a few years ago, and especially if you compare to 10, and don't even speak about 15 years ago, right? There is so much information. It's so easy, so accessible. It doesn't even compare. So I think there is a huge advantage or a huge opportunity there, because if you really want to be a trader, it's so much easier to get the information nowadays than compared to a couple of years ago. That should translate into having, more profitable traders. It should, and I think it will. It does, but still, it doesn't. Having access to a lot of information, you still have to filter which ones are, the good ones, and which ones are not so good. Not to say anything else, and even then, having the right information is only part of the puzzle. You still have to work on yourself. That hasn't changed. You still have to have good risk management and mindset. That hasn't changed. Develop your system. That hasn't changed. So yes, I think there is an advantage compared to a couple of years ago. The farther you go down history, yes, there is an advantage, and yes, that should translate into bigger number of traders being successful, and we seeing that, and perhaps that's what we will continue to see. I think so. All right, let's look at It's a good mindset, having strict rules. All right. Checking the chat to see if we have anything. EU filled the gap. Yes, it did. Actually, we have a Discord. If you're not Spirit Boy, if you're not familiar with the Fiverr completely, we offer so much education. It's not because I'm here representing the Fivers, but you can check for yourself on the website. There are so many educational videos that are truly very helpful to any trader, especially a beginner trader. And inside, if you buy an account with us, inside there's a whole section of VOD section, video on demand, of many subjects that will teach you, the basic, the fundamentals, and also looking at the live streams. We try to bring as much value to you as possible, and I think I know I'm praising my own bread, but I think we as a team, the Fivers as a team, we're doing a very decent job in educating and helping traders to level up their knowledge about trading. And that we also have a Discord community, which is very, very helpful, because trading is a lonely activity, and unless you have somebody to trade with, it's kind of lonely. You're with the charts, and of course you may be interacting with others, but unless you have a community of people who you regularly meet online or in physical world, it's typically a lonely activity. So at Discord we have for example, today we have workshops. Every weekday we have workshop streams explaining, and we can go there, you can go there and hang out, ask questions, and sometimes most of the time we talk about trading related subjects, of course, but not all the time. Sometimes we talk about other stuff, about health, about good habits, how to build them, not necessarily only about trading. So it's a great Discord as well, is a great source of education for traders, and not only limited to trading related subjects. Risa says that this week has been a little bit less than nice experience. I'm sorry to hear that, but indeed we are. I believe we are, if not the best, we are certainly one of the best prop firms out there, for many reasons. Look for yourself, and you'll notice that we are different. All right, let's look at EU, not GU, right? We were looking at that trade before, and let's look at how that trade worked out. Right, this is the entry, or this is the area that I entered. This is the order block that I use for my entry, and one of my targets was, let me zoom out a little bit on the 5 minute perhaps. One of the targets, the first target was, let me get this right. Sometimes my trading view doesn't cooperate. Does that happen to you guys as well? All right, so I had a couple of entries, targets. This is the most, that target is the most, which one has just been hit, is the one that is the most conservative one, right? And then we have another one, which is, I would say still consider this to be, relatively conservative. And this is based on the ATR, which I think is unlikely to be hit unless we have a huge, influx of buyers, maybe perhaps in 40 minutes after the news. So, but that hasn't happened yet. And let me double check my trade if, yeah, I did hit TP. All right. I did have it on the most conservative place. Okay. So any requests, guys, in the chat? Don't forget to hit the like button if you enjoy our streams, the opportunity that is given to the trader, beginner trader. You are able to, tap into our experience, into our, approach. Jonatan very often explains his strategy. Alex explains his strategy, his profitable strategy all the time. I do so, and we have increased our team or expanded our team with Anastasia, Diana, Pedro. So there are so many strategies and approaches and ways to learn from each other, from other successful traders, all at your disposal through these live streams. All right, we have a question here. How many assets do I trade? Zenoni is asking. I mainly trade EU and GU, right? That is those are the two main assets I trade. But since, as I said, since I, price action, the quasis, they form on every asset. And although there is a little nuance there, I'm able to trade them on virtually any pair. I don't do that because I want to focus on, having the highest quality, and I'm not able to have a very long watch list, right? It takes off. It comes at a cost of quality, of my execution. So I only trade those two mainly. But if I see something that I like on gold or any other pair, I'm not limited in trading it. I could, if I build my case correctly, top-down analysis, do all the time frames, all the relevant time frame that I use, then I will be able to trade it just as I do EU and GU. So the answer is 2, with the possibility of trading anything else if I wanted to. Spirit Boy asks if I'm a supply and demand trader. I would say yes. In the end, I'm known for OBs, order blocks, and quasis. But the quasis is a reversal pattern, so I'm a reversal trader, you could say. But the OB, which is also the same concept, just a little bit different, is a form of supply and demand. So I would say yes, I'm a supply and demand trader. Another question here: do you think we still will be bullish on EU GU as we have taken London high now, or will we see a reversal? I think because we have news coming in about 40 minutes, that is going to decide which direction we're going to go, and that's the unknown factor here. It's difficult because a lot will decide on how that news comes out. If there's anything of surprise, if it takes away the bullishness that we have seen in the market from taking out that London high. I personally, if we look at on GU, in any case, GU has been very bullish, I would say, compared to EU. After that gap, we have had a very nice reversal from the low of Monday. That this impulse is very significant, right? That is a very significant move. Now we have come into the the area, the ignition, the order block that was created before the gap. So the question is, this structure to me is the structure to be taken out before we can conclude that the move that created the gap has been negated. That hasn't happened yet, right? So we need to understand that every move in the market, not always, but at some time frame, not at every time frame, I should say, but every move in the market will leave an order block behind, right? In some time frame. If it's not on this one, it will be the one higher, one below. But every time, every move in the market will leave an order block behind. It just not on every time frame visible. That is the ignition order block, right, of that move. And unless we take out and close below that order block in the case of a bullish one, right, and upside down for the bearish one, right, so above it, unless we take out this order block, invalidate it, and close below it in the same time frame, we should expect for price to bounce off of it and continue in the original direction. So the question to be asked is, which structure, which area is the ignition order block of a big move? And if we understand that this gap, which caused a lot of volatility and a lot of pain for a lot of people in the market, right, especially those who left their trades open for the weekend, you can see that on the H4, in any case, it left this order block behind, right, this order block. So that is, to me, the area in this time frame, in any case, that needs to be taken out. By taken out, I mean it needs to invalidate it by closing above it. Okay, so it hasn't done that yet. In essence, let me get this out. In essence, this is what happened. We had a move down, right, with the gap on Monday, and that left this order block on the H4 behind. And now we have come very potently back to that area, but we're still in that area. So we need still to break out of it and close above that area, or come back the other side. Whichever happens, that's going to be the clue as to where price is going to go next. Because now we're sort of at an intersection. It's like a stoplight. Does it go left? Does it go right? We don't know yet, right? That's the future. That's the unknown. So the price hasn't told us yet. Based on this price action, in any case, you can use other indication on the higher time frames, lower time frame. But as I said, GU is, it has a bullish setup, as well as a, right, we do have a bullish structure being created, and we do have bearish structures which are still fresh on top of it. So which one is gonna win? That's the question. It's difficult. You really can't say. We don't have that data yet. It's unknown. It looks like it's, if you ask me, it looks like it's going to break and continue higher. But I mean, it's no certainty. It just looks like that way. And objectively, we need to wait for this H4 to be taken out with a close above it. And then we know, okay, it is breaking bearish structures. It is now following the script of price going much higher. It has a bullish price order flow, and we can expect price to continue to go much higher, perhaps into structures to the left. Who knows? We can look at those at a later time, but that hasn't happened yet. So that's the trick. No? That's the way to do it. Spirit Boys asking, fresh zones. Yes, I mainly use, not always, I mainly use fresh order blocks if I only have an order block. If I have a quasi, it doesn't have to be fresh. Right? A quasi is a much bigger, maybe I can explain a little bit about that. Right, this is the quasi. Takes out the neckline. We have an established downtrend, takes out the neckline, and comes back to some area in this leg, from this top to this highest point, comes back into some structure before it continues, right? That's the reversal pattern that I talk about all the time. And in there, what I'm looking for are order blocks that are being used as the, inflection point of that right shoulder. These order blocks, I call them entry order blocks, right? Because that's where I want to enter to catch this move. And those entry order blocks are not subject to freshness rule, right? So it doesn't matter if it's how many bars there have been between their creation and when price comes back to them, they still are valid until they are invalidated by a close below them in the case of a bearish one, or above them in the case of a bullish one. So yes, I do use at a quasi, it doesn't have to be fresh, and in order block, it does have to be fresh if I want to trade it. Otherwise, I'm just going to use it as for the narrative, which is not as strict as my trades, my actual entries. All right, that's awesome. All right, we have one here, one question or one request. Look at gold. Is gold pushing up as it has been in the last hour or so? This looks quite bullish still. It has a retest of that previous high of Monday. It's a very beautiful retest there. That's a a trade in itself, break and retest. Breaks out, retest, and it's continued to go to that ATR. Roughly there, Hamid said it's a little bit higher. Well, it depends on the value, of course, but I think it's roughly there. Triple heart. I don't know what that means, Haresh. Triple heart. Not sure what you're referring to. Makes me wonder, though. All right. Checking the chat for any requests, but yes, gold. Spirit asking how long I've been trading. Well, I've been trading. It's a little bit tricky. When exactly should I consider I started trading? But full time I started trading in 2017. So this is my 8th year trading full time, that is, and I've been profitable after roughly 3 years after I started full time, that is 2017. I believe it was October 2017 that I started full time. But I have traded in the past. In 2009 I traded gold. Well, for a long time I had some great success, and I thought it was me, but it was the market. It wasn't me until much later I learned how to trade properly. I went from 1K. That time there wasn't any prop firm on the internet, and I turned an account from 1K in 11 months to a little over 30 grand, and I was ecstatic. I thought, I'm genius. I can do this for the rest of my life. But it wasn't me. It was just the market was ballistic. Was going parabolic, and it was it didn't matter what you did. If you just went long gold, you made money. So and that of course ended as soon as the trend ended, and I didn't know how, because I didn't know how to trade. That was the end of it. All right, so why gold is bullish? You mean fundamental? I don't look at the reasons behind. I only look at the charts. I try to contain everything I find about gold. I contain it to the charts. Yeah, it is. That is, you get bitten by the bug, right? You get a fever, the trade fever. You get either a couple of wins, or maybe one big one, or maybe, as I did, like a considerable win over a long period, and you think you got it figured out. But it takes much more than that to be profitable. So yeah, that's about it. It seems like it's going to have a push in to that target, and I think we have 25 minutes to the news. That is the Jolt job opening. 25 minutes. Let's look at BTC. BTC is moving, has some very nice movement. Bitcoin has nice reaction there from the daily order block, which is within the monthly, which is within the weekly, which is within the monthly. So you have a very nice area here of triple alignment, and we talked about this earlier, how we were expecting price to go to that order block. It never reached that entry order block on the H1, was it? Let me check. Actually, it reached another one. Let me see. No, just one. No, it is on the H1, which is this. There you go. It did reach. It almost reached that order block by a little bit. It missed it by a little bit before it made its move. And since then, it's been very bullish. But of course, that is after that huge wick that spooked everyone in the crypto space, and it's now recovering. But let's apply the same logic. What order block did it leave behind when it created this huge move? And in this time frame, there isn't any order block that stands out. So we go one higher, and you can see that this is the order block that was left behind. So basically, the jury is still out on Bitcoin if it is going to continue. If this, what we're seeing right now, is a retrace for a continuation lower, or a complete reversal and perhaps breaking a continuation higher, right? It is this order block that needs to be taken out, and we're not even there yet. So there isn't actually, the price hasn't shown us who is in control going forward. So we just have to wait. It does have a very nice quasi though on this area. Came back and it responded on the correct or the adequate area for a move up. So presumably, because of this structure, I would say that the buyers will win, but we'll have to see. Because of this reversal, I would assume that it's likely to reach that, wanting to test that high again, and if not, at least this one. But we'll see. I think perhaps even today or later this week, we'll have to see how that goes. Haresh, I hope so too for you. EURGBP. I used to trade EURGBP a lot, a long time ago. Let's look at that today. By the way, there was a very nice trade on GA, pound Aussie, and it's very extended, but that's typical of pound Aussie and those crosses. Pound Kiwi as well, it can have some very extended move, very exaggerated, sometimes going 3-4 times its ATR, daily ATR, without any pauses. That's not something you see on EU or GU or dollar CAD easily. So that's something particular of these trades, these pairs. But it is really doing its best to break out. It looks like this order block is, hanging on a limb. It still hasn't been invalidated, but it's still wait to see. I think if we can catch a close today below that level, which is 1.99956, a close today below that level, we could see some pushing back into that demand zone. That was the supply zone that flipped into a demand zone. You can see how it flipped and it became a demand zone, right? A flipped supply zone. Maybe we can get another retrace into that area before price action tells us what it's going to be doing. But EURGBP, let's look at EURGBP. I don't have it as on the watch list. All right, let's take a look at it. Okay, so we have a quite compact price action. The last relevant structure is this on the monthly time frame. Last time around, it broke that structure, meaning even though we are predominantly bullish from this structure or this area, right? The order flow was bullish from as we were printing those candles. We are seeing some weakness coming in. So that's something we need to understand, right? There is a possible swift shift coming or happening, right? The creation of that order block, and then the invalidation of the order block that I took out, this one, right? The fact that that's two clear signs that the buyers are no longer necessarily in control. So we could be looking for, those are the signs of the shift. So we could be looking for lower prices going forward. That's one thing on the monthly. All right, so the weekly time frame. It's quite congested, but still there is a reversal pattern here. It's quite nice, actually. And the last order block is still standing. It's quite wide, though, wider than the monthly. That tells me that it's, probably not very useful, but it's there. And that's where the market is shifting from. So using those two elements, those two information, I would think that, we could, that also reinforces that idea. We could be seeing some lower prices going forward. And if I look at this more recently, we don't have any structure on the weekly time frame to stop us, right? There are nothing in here, and nothing in here to stop us. So the logical place we're going to target is this level, right? Let me change this. There, that's the logical area because of the breakout structure we see here, right? We can assume that this is going to go and trade something in this area, so roughly in here. That would be the target. That's where market is trying to go to. On the daily, we did have a very beautiful fresh order block on the daily that was retested within that weekly order block. This is a very nice trade, actually. Whoever caught this has my my kudos. So that would be the entry. Price comes back, even though it does have that wick that scares you off. It never invalidates the order block, and comes back and creates that outside bar, which cements the reversal basically on the daily time frame. And let's see where would the entry have been, because of course it has already happened, right? If you look at the H4, the neckline would be all the way down here. It's quite low. Actually, I don't have the neckline here. Yes, I would say, well, the neckline is here. This is the neckline. There you go. All right, so that's the neckline. And on the H4, it hasn't come back yet. It looks like it's not even coming back. This would be the no, actually there is a on the, let me correct this because this is not the correct one. That is the neckline. On the lower time frame, that would be the left shoulder, the head, and the presumably the left shoulder hasn't been created yet. So the right shoulder, I mean, the right shoulder. So we can wait for price to come back, if it comes back, and we could be waiting for an entry here on the H4 and an entry. They're very close to each other, but that's how the system works. Those are the two, and you would say, well, what's the point of having two areas so close to each other? Well, you can use your TP beyond the first one that gets tapped into, right? As long as it doesn't touch this one, you can have your stop loss above this one, right? As soon as the second one is touched, your TP should be above it, right? Because the idea behind it, the logic is that it's going to that's the structure that's going to be using, the price is going to be using as it comes back, as it reverses, I should say. All right, so this is the, there we go. Those are the that's a 50% retracement, and this is the area. So it's a valid entry. We'll have to be patient and wait for price to come back. And perhaps on the lower time frames, you may have already been able to catch something. Perhaps in this wick, there was something to be caught. I can look at even further down. Actually, there wasn't. No, there wasn't any entry possible. Well, actually, yes, this was a fresh order block by it when it was created. And that means that I would be, this is the area. If you were watching this before it signaled, that's the area that you could be looking for to trade, right? Once it's created, you look for the entries on the lower time frames. You go to the 2. You actually have an even more beautiful entry there. And this is exactly how I frame my trades. So that wick is where, if there is a signal, that's where I would be looking for the signal, right? So I'll be taking the trade right in that wick. And a lot of the times, maybe I should leave the arrow, right in that wick, right? So that's the wick that I will want to catch. And on the 5 minute, let's see if it had a trade in the 5 minute. Well, that could be already an entry, and the other entries are actually that's the one. See how it comes to that entry, the second one, and reacts with that wick and then never comes back. Those are the, even if you were able to catch the first one, if you weren't stopped out, it's also perfectly fine. Let's see if let's see if there was a 1 minute entry. I don't think so. No, I wouldn't be taking the 1 minute there. Neither the 2. Perhaps the 3 minute. No, not even. No, I think it's only in the 5 minute. Yeah, it's only on the 5 minute. All right, so it would be this structure. It didn't trigger on the other time frame. So this is the structure that I would be, you may have, it didn't trigger, by the way, on the 5 minute, but that would be the structure that you would be looking for from this point on, does it shift in order flow in this time frame, right? On the 5, that is, not on the 3. And once you conclude that, once you get your signal, you go short and you put your stop either above this structure or the head that is there, and you target, because you have a weekly and a daily structure, you can have a portion of your structure of your trade targeting those bigger macro structure as well. Let's get it close. Right, so this is you got a daily. At that time, of course, you did have a daily. So my target based on just on the daily would have been, maybe it's still at play. Let's see. 93, that makes it 186 from this low. 186, there we go. So my target hasn't been reached yet, which is 48.52. That would be my target. There we go. 52, I think I said. It doesn't matter, a few pips up or down. It's a macro target, but that would be the trade that I would have frame around it. Right, depends on whether you get your signal or not. It depends on what your signal is. Right, having your TP there, and your target and your your stop loss above the head or closer. It depends on what you like, how you prefer your, what kind of profile you prefer to have on your win rate and risk reward ratios. But basically that would be a very nice trade where you take the lower time frame as the entry, you use the hourlies for your structures, for your setup basically, but within a daily and even a weekly setup, right? So you have a higher time frame behind you, you hourly to frame your setup, and your minute to 5 minute in this case to execute your entry. Someone asking the dollar yen, but first we still have one question here. What are your options on just trading one pair? I heard some people say you shouldn't because you will force trades, and other saying you should because then you get really good at just one pair. This is a good question, Lawrence. Thank you for it. I would say it depends a little bit on your trading frequency, right? If you're a swing trader where you may have maybe just 1 or 2 trades in a week, then perhaps trading one pair, may not be ideal because, well, it depends on how much time you have on your hands or how much time you can dedicate to trading. But if you're, full-time trader and you only have one signal a week or maybe 2, it may not be enough action. Okay, it's not a bad thing to have fewer trades, but it needs to be in balance with what your personality, how much action do you want, do you need, can you handle. So I would say for the majority of you, who I assume are intraday traders, and correct me if I'm wrong, how many of you here are, maybe I should ask it in the chat, how many of you are intraday traders and how many of you would you categorize yourself as a swing trader? Because depending on that, the answer to this question could be a little bit different. So if you don't mind, let us know in the chat, put in, just type in swing or intraday, and we get a little poll here, what you guys are typically trading. For a swing trade, one pair may not give you enough signals, right? Because as a swing trader, you're looking for the higher time frames, you're looking for the weekly, the dailies, and sometimes you go to the lower time frame for your entries, but it's not going to be on the minutes usually. All right, so not the majority, from the very limited poll of the last couple of messages, I can see that the majority of the traders, is that so? Right? 3, 4, 4, and about 3 are on the swing trade. So a little bit more to the intraday. We have a little bit more intraday traders than swing traders. For a swing trader, I think one pair. I'm sorry. Yes, for an intraday trader, one pair is, I would assume, is enough. And I agree with the latter advice there, that you can focus on just one. It will instill or cultivate in you patience, waiting for your signal. And for example, I'm very selective with my setups. And even I, who am very selective, I get almost every day, I get signals, right? So that's enough. You don't have to have, tons of signals every day. Just a few is enough. And I would say one pair can give you that, as long as you're not too selective, your system isn't, too rigorous, too filtering with the entry criteria. And pair helps you to know where the macro levels are, how it usually moves, what the behavior is. Every pair has a little bit different personality, and the times that it explodes or has more volatility. That's something, if you trade all 28 pairs that typically find on any broker, it's difficult to know which ones, exactly how they behave if you trade them all. Yeah, you don't gonna remember, the profile, the behavioral profile of every 28 pair. But if you focus on just one or maybe just two, it's much easier. And I think that at the beginning of your trading career, you should be considering that you're not actually trading to be profitable. I know it sounds weird, but you're trading to learn most of all. You're not there to win big money. You're trading to find out who you are as a trader, where your edge lies as a trader, what system goes best with your personality and the available time you have, and your emotional kind of person you are, right? Should be your goals as a beginning trader. Not making profit necessarily. Profit is a byproduct of having those things well chosen. Once you find the system, when you fine tune it, it goes well with you, then you will have profit, and that's the byproduct. But the goal isn't to get the profit. At least if you focus on the profit, you're not focusing on, you're not putting enough in focus on fine tuning what works best for you. And I think it's so important to do that. Once you know who you are, your identity as a trader, then you can branch out and perhaps add other pairs. In my case, my system is quite selective, so I don't need that many pairs to give me enough signals. And if I wanted to, I could, look for my 2 pairs, and if they don't give me a signal, look for other pairs. I chose not to, right? And the reason is simply, at a certain point, you have to have an eye for work life balance, right? So I want to keep, and as a trader, it's not only about trading. You still have to work on your system, on your strategy, to either manage the quality, right? Quality management of your execution and your strategy, improve it, research and development of your own strategy. Those are things that you need to keep doing even after years. It doesn't stop because you're consistently profitable. You still have to work at it, maybe not every day, but regularly. Your mindset, your journaling, all of those things make you a better trader. So it's not only about, more signals is better. Actually, it's the right balance between signals that teach you and give you profit and is in a level that is balanced to you in a frequency, but also allowing you to further develop yourself as a trader in the mindset realm, in the risk management. There's always another level for you to achieve. It's there's more layers to it. But a great question. I would say stick to one pair if you're if you get a couple, like at least one trade a day, stick to that. That should be enough for you to learn and progress as you go on in your journey. All right, let's look at. We are getting to the end of our show, and we have, of course, the news came out already as I was speaking, and it is the news is. Let me check this. We it says here the news was lower than expected, right? So worse than expected. And let's see how the market reacted to that. Right, let's look at GU since that's where we were looking before. All right. And of course, the market continued to break out to the upside. And I took my profits here. That was my conservative TP. And it keeps on going. This is I remember the ATR was much higher, and maybe now we have the news out, we can maybe it isn't that out of the ordinary or unlikely to hit that. But at the before the news, it wasn't such. I didn't find it to be such a great 105 from the low of the day. So that takes it at 24.85 roughly. That would be the ATR target for today, 24.85 to roughly, give or take a couple of pips. There, that's the TP based on the ATR. Personally, I wouldn't have a target that, although now it seems plausible and likely to be hit after that news. But I prefer to be out before the news. I know it sounds dull and not so excitement because the moves they come before the news, but the thing is there's a lot of risk that comes with it as well. And when you get your entries out, when you get your trades before the news, it's like you have it seems like you have the perfect timing. You get out before the storms comes out. It trades more calmly when you do so. All right, let's look at the chat before we wrap things up. It's Tuesday, the 4th of February, and we are at the end of our stream. I hope you guys enjoyed it as much as I did and all of our colleagues. Patrick here is actually Spirit Boy says two pairs that are correlated like EU and GU, because sometimes one pair won't give you a setup, but the other correlated pair will. That's for me anyway. That's exactly the case for me as well. I trade those two for the same reason, because the underlying movement is the dollar most of the time, not always, but sometimes the EU doesn't signal me, and when it, especially now, I'm trading GU, it's because EU didn't offer me a setup to trade from. So by having them two, I more or less know the movement behind them, because it's usually the same. It's the dollar moving. In this case, Trump with his foreign policies, and giving that allows me to have enough signals every day by having them to very good advice. A lot of traders do this, by the way, using EU and GU. We have Patrick as well. GU trading. and we have some other members sharing their experience with us. Awesome. All right, let's wrap this up, guys. Let me I hope you enjoy our stream. This is a pleasure of ours to be bringing and sharing with you our experience, our passion, because we are traders at heart. We enjoy trading, and I think we talk about trading all the time. I know it's a live stream about trading, so it's obvious we're going to be talking about trading, but that's really, the stream is just a little moment of us, but that's what we breathe, wake up, breathe, and do every day. We are traders at heart. I hope you enjoy this stream. Join us again tomorrow for another episode of live trading with us, the 5ers. If you don't have an account yet, get one, get into the Discord, get your chance at getting funded, and get up to $4 million in funding. It's your future is in your hands. It's all within reach. Just if you dedicate yourself to it, have discipline, and show grit, you have a chance at it. Thank you all. I invite everyone who is part of the Discord community to come join us in about 40 minutes for some workshop. And see you guys tomorrow. Bye-bye.